Good morning, good morning, good morning. My mic was a little bit broken. I'm out of. Let's do a quick legal disclaimer. Please consult your personal financial advisor before you make any decisions regarding your personal financial situation. I am not a financial advisor. I do not recommend that you buy or sell any securities or investments. This video is for information and educational purposes only. Time is 9:30 on the board. I'm out for 1.6K on my 1K QQQ puts. Good morning, everybody. Good morning, Kevin. Good morning, CP. Good morning, Stanley, B. Turner, Donna, David, Devish, Harry, Edison, Alfonso. Good morning, everybody. WhatsApp is broken. $600 profit real quick. Wow. Alrighty.
This record-setting rally and how far stocks can go. Let's ask Tom Lee. He is FundStrat's head of research, a CNBC contributor. He's with me at Post 9 because he is out with his 2026 outlook for stocks. Thanks for sharing it with us first. We appreciate you for that. So let's get right to it. So we're going to 7,700. That's the headline. So that's a pretty decent year in the year ahead. Not quite as robust as we had this year. Why that target?
Well, we're 3 years at 20% gains because the S&P probably closes.
Good morning,
7,000
Iso.
or
Good
so
morning,
this
Brand.
year.
Good morning, Zach.
And
Good morning,
so I think
Havik. Good
there's a
morning, Devish. Good
deceleration
morning,
of what the market
Jonathan.
can
Good
do
morning,
next year.
everybody. Good morning,
But
Chris.
that 10%,
Good morning,
I think,
Scott.
belies what will be a very turbulent year, similar to this year, where this year we had tariffs and sort of a Fed that became hawkish again. Next year is a year where we have a Supreme Court potentially overturning tariffs, and then a new Fed, which will be tested. So I think we could have what looks like a bear market in 2026, but we exit strong.
I mean, even with a new Fed, and you know, it's divided obviously, as we learned yet again
from yesterday's close at 625.30 on QQQ.
what the president
4 p.m.
wants
close
to
on
do
SPY,
in terms of who he wants to
688.
appoint, that the
See how it
bias is
does.
going to be towards easing.
Correct.
So why so much turbulence around that particular issue?
You're right. I think next year the real message at the end of the year will be there's the Fed put back in play. So then you have a White House put and a Fed put, which are tailwinds for stocks. But before all that happens, the new chairman has to be confirmed. It takes about 90 days from the time that his nomination takes place and the confirmation.
LOD, 9:38
and the markets
SOD.
always test a new Fed chair. So I think that is the January to October period, is that the Fed is being tested, even though we know it's going to be a dovish Fed.
Man, market looked crazy bullish until yesterday closed, and they pulled the fuck back with AVGO earnings like nothing.
A cut into a
especially.
strengthening economy, though. I mean, at the end of the day, that supersedes everything. Isn't that partly what the last couple of days, yesterday and today, are about?
Yeah, I mean, this was in my mind, even though people positioned it as a hawkish cut, it's actually quite bullish for stocks because the Fed, again, is now weighing the downside risk to the economy, which is the Fed put coming back into play. Plus, as you know, QT ended, and even though it's not officially QE, it's the absence of tightening, which is
IWM, Dow Jones still strong
if
today,
the
all-time highs.
Of whatever they're doing,
But the longer IWM
are
goes
nearly
like
the
this
same
without
as
a
if you wanna
significant
call
pullback
it
and it's going
QE,
higher and
the bottom
higher
line
and
is stocks
higher
went
and
up and
rip it
rates
up
came
with a
down.
tiny
Yeah.
little
And if
wave
that
week.
continues to be the picture,
I
it's
think
going
there's
to be
gonna be
hard to
something
lean
building
against the equity
on
market in that
IWM.
scenario.
Honestly, I don't know when,
and the
but
right groups are responding,
maybe
as you
soon.
highlighted.
Next
Small
couple of
caps hitting
days.
record highs,
feeling
financials
IWM.
rallying. And now what we just want is the ISM to turn. But if housing can turn, then you've got a real broadening.
Tom Lee says SPX looked 6,000 or 7,700. Tom Lee. All hail Tom Lee. Market deciding what to do at morning. I took my morning put profit at market open. Overnight puts from 624 QQQ. I left. I don't care what happens here.
Argues
I'm
that
letting the market
allowing
form
China
a
access to
cycle.
advanced chips puts national security and the American AI industry at risk. Joining us right now is chip war author Chris Miller. He's an associate professor at Tufts Fletcher School. And Chris, you've got some pretty strong feelings about this. Do you think that national security is taking a backseat to profitability?
That's in the top of this broken down trend line, looks like.
Well, I think that's the concern in the administration's decision to allow more AI chips to flow to China. You know, right now the U.S. has a really commanding lead in the production of AI chips. That's been one of the key drivers of the U.S. leadership position in AI. That's
Zero
why U.S.
DT
firms
puts are getting cooked. I did not take $150 profit that it came in 5 minutes yesterday, and they squeezed up into 4.
Giving a shot in the arm
and they
to
fucking
China's
reverted
AI
it.
ecosystem.
It looked like it was going to get killed
China
off. It was my house
had
money.
An interesting response to some of the chips that they've been allowed to purchase. The H20 chips.
It fucking went up $600 at market open.
Even in the instance of some of these chips, they're saying, if
market trying to bounce here,
companies want to buy these chips, they're going to have to make the argument to the government there why they're buying those chips.
Even if they want to go long today, I'm waiting for a cycle confirmation at the minimum.
I think the Chinese government is dead set on trying to build out its own fully self-sufficient domestic semiconductor ecosystem. It's been trying to build this up for now over a decade, and it believes that it can't rely and doesn't want to rely on the U.S. for cutting-edge technology. So in the short run, it's going to keep buying small volumes, maybe medium-sized volumes of AI chips from the U.S., but the vision that she has and the vision that the entire Chinese government has is to be completely self-sufficient in everything that their computing and AI industry requires. And that means, first and foremost, the advanced AI chips they can't today make at home.
I mean, it's not that different than
push it up into
we're
earnings, and then with
in the United States. We don't want to rely on China for rare earth metals or anything else that we've come to rely on them over the years.
630 to 617 to 625 yesterday, 625 to 621 to 623 today.
The key difference is just the difficulty that China's had in making them. Today, China can produce relatively small volumes of AI chips.
SPY is filling the gap up top.
Plus its partners in
4
Korea and
p.m.
Taiwan
close has not been filled yet, but it is trying hard.
China can
Let's go look at SPX, how
for the
SPX is opening.
Future. And so China's really struggled to ramp up its manufacturing here, which is why the government's pouring more money in every single year to try to build up its ecosystem. But it's also why the U.S. has a kind of unique advantage in this space, because there's not much that...
This guy looks like a smart nerd. November holiday earnings. It says November holiday shopping starting off to a lackluster start. Didn't they say there's a lot of holiday spending last week? Gap has been filled on SPX. Let's see what happens here. And there's no confirmation long, no confirmation short. The gap has just filled off of 930 into 930.
The NRF Retail Monitor is out for the very important shopping month of November. Our senior economics reporter, Steve Leisman, joins us right now with the exclusive
Steve Leisman.
Steve, what's the verdict?
We have not gap filled yet, it looks like.
Good morning, Becky. November holiday shopping getting off to a lackluster start, according to the CNBC NRF Retail Monitor. But the results, it battled some calendar issues.
I guess I wasn't looking at SPX until market close, but it gapped up on the 1 minute, gap filled, and then pushed up.
Wow. Let's take a look at the data. Retail sales powered by real credit card spending data that we get from Affinity
how wild this shit is opening.
Just 0.12, and that's ex auto and gas. And what we call the core, that takes out restaurants, was flat.
And they won third, three third, trying to show
year
bearish, but it could easily flip
better,
up and go north.
4.5% and 4.7 for the core, as you can see right there, down a little bit from the prior months year over year.
That's amazing. QQQ from 621 to 623 in 3 minutes. Amazing.
In the calendar,
5 minutes.
This month, no exception. Take a look at these two issues here. Cyber Monday.
There's a little bit of a market index divergence today. It is very important to pay attention to how differently they're acting, what is doing what, how it's showing what.
Because the seasonals go back about
Dow Jones,
5 years or so. So even a big unadjusted change gets wiped away. NRF economist Mark Matthews makes note of this, points out on a month-over-month basis, November didn't hit the ball out of the park.
Good morning, everybody.
But we lost
Thank you all very, very much.
Days of the year,
good morning.
Monday
Thank you for
December.
saying good morning, everyone.
The
Thank
relevant
you.
story for November is always the year-over-year number,
Friday.
which is well above most forecasts. forecast
Today
for the
is
holiday
Friday,
season. So
end of the week.
that's
So
a pretty good way to think about it.
Let's take that into
Unfortunately, 7 of the
consideration
12
as we
sectors on a
head into
month-over-month
today.
basis, they saw declines, including
That is what
electronic and
professional
appliances.
traders do.
And I wonder
They just
personally if people might have
wake
waited
up
for
2
Cyber
hours, 3 hours
Monday
early,
to make
drink
those
some
purchases.
coffee,
So we'll
and
have to
realize
wait
the
till
day they're
December.
going into,
Building drug
realize the
supplies down,
environment
general
they're going
merchandise also
into,
down.
things that are happening,
Digital
things they're
products was
trying
down
to
as
show,
well.
and
Food
how
and
you can
beverage and
think of those
restaurants, people seem to go
possibilities and
out.
whatnot.
Didn't
I'm not
necessarily
saying
go to the mall,
speculate
though.
on it, but I'm
All of
saying
that leaves the big
they're doing
question when we get in November.
reviews,
That's week. Will December shopping save
right?
the day?
Something
NRF
before
says
they come in.
their
So
Thanksgiving weekend survey
there
from
is
shoppers
no
said they had
something. If there is
only
no
done more.
setup,
They had
there is
done
no
more.
need
They had
to
more
be
than
like,
half of their
oh,
shopping
this is bullish or
left to
bearish.
go.
Oh, this
That's
is
the
down
highest
south.
percentage
Oh,
in
down north.
2019.
There's no
So
point.
stay tuned
What is
and tune in Monday,
pointful
by the way, for the much-loved holiday edition of the CNBC All
setups,
America survey,
right?
in which we asked the question, did you AI shop this
Confirmations
year? And
along
then, of
with
course, coming
setups
up
and cycle
in an hour
analysis.
or less now, we'll ask about the consumer,
And
the
most
Fed,
importantly,
and the rate
volume
outlook
and
with Chicago
momentum.
Fed President
So
Austin Goolsbee right here from the Chicago Fed. Becky?
no volume,
Steve, I think
no
that's
momentum.
the issue. I think
I don't
the
give a
shopper
fuck.
may be down,
No real
but not out,
direction.
and I think
don't give a
the
fuck.
timing is everything about that. I mean, Thanksgiving
Everything
was
else is
so
forming.
late this year. I didn't start my holiday shopping until much later.
That's all it is.
I'm
every
way
day.
behind the curve at this point. It's
Every day
you don't
there's
panic
cycles.
until after
Every day
Thanksgiving.
there's traps. Every day there's a bull trap or bear trap. Every single day the market cycles. Every single day it is a test of your human psychology, your human ability. 940 is rejection trying. There's just no confirmation rejection. 1 or 2 red candles coming from the roof of the SPX gap fill. Did not gap fill on SPX, but it did on SPY.
Because I used
speaking,
Perplexity for this last night.
Market is deciding.
71% of the
smart
time,
money hedge funds that went in at HOD might be leaving in 1 or 2 massive red candles before the LOD breaking to let the market cycle here and figure out what to do. Calls, smart money deductors went from 930 to 935, did not play from 935 to 940 hypothetically speaking here, and they're letting it cycle and form what to do. A lot of retail traders, a lot of newbies, a lot of amateurs are stuck in calls and puts right now. And they are, what's going on? And the market is literally deciding everything involved.
So we got the next couple years are going to be
deciding
normal.
what to
we'll
do.
get them all
That's
in,
all
in
it is.
November. We won't have to make
This
these
is
kind
LOD
of
testing,
calendar
LOD
adjustments.
hoping.
But even more
Let's see what
interesting to me
happens.
is
What are we
we
talking
went
about?
back
LOD,
with Mark Matthews.
HOD,
We looked at the numbers
930,
from 21 and
940.
22.
Right.
People
This is what
hanging at
smart
home,
money deductors
getting
do,
checks
man.
from the
They don't
government,
really just do shit
nothing
off
to do.
candles
They
and they're like,
spent
this
like
is bullish,
crazy
this
during
is
the
bearish
November
today,
and December
this is,
holiday season. So
I think this
with
is
our
gonna go to
5-year
heaven
seasonal
today.
adjustments,
I think
that
this
all
is
wraps
gonna,
into it now. So
I
we're
think the
still
bulls are
battling
here
these
today.
tough Novembers, and I
None
think
of that
you're right.
bullshit, right? It's
There's
literally
the
just about
CNBC
what is
NRF
happening,
retail
what
monitor,
can
and
possibly
there's the
deduct.
Becky
Just
Quick
because they're
retail
showing
monitor.
full-on red,
I like to
full-on
follow
green doesn't
that
mean
one
it's
as well.
full-on
It's
bearish,
just my
full-on
panic,
bearish.
my own panic
It
level
literally
of
just
what I
means
don't have done at this
they're
point.
making
There's
people
not enough
think
weekends
the cycle
between
being
Thanksgiving
created.
and Christmas when it happens this
940.
late, and that's bad news for all of us.
Deciding what to do. 940 rejected to 940. 940 is not breaking the floor, meaning they are creating an algo range at the roof. Right, candles are coming in 1, 2, 3 red, but they could be leaving here, waiting for the market to bounce and to wait for a cycle confirmation. Why? We're at the floor. There's this pivot point trading off the LOD. If even long, it's pivot point trading off the HOD. Right, a lot of smart money deductors, they don't really do a lot of retarded shit. Right, all they do is just literally sit back and let everyone else do whatever they don't want to do. Right, basically what I mean by that is market is cycling, market as a pivot point. It's very, very undecidable, up or down. People are speculating up or down like fucking nuts. They don't give a fuck. They want to wait until a deductible moment comes. Right, that's usually how it is. It's just people can't catch on to it. People don't want to realize it. People don't fucking want to talk about it. People are not noticing it. But I mean, every day, every single day. Time is 9:45. 945 is testing the bottom of the algo range now. This is counting as a 940 push into 945. There is an algo range at 940 still. Algo range at the floor. Wind direction trying to be south on QQQ alone. Wind direction is south. I'm not going. Why? I already played my down south. 1/3, 2/3, 3/3. This is the 3/3. I don't fucking play in the 3/3. I don't really care. Even if I do play in the 3/3, I play very, very small. I play very, very fast. A lot of people, they hold in the 3/3. They're lazy as fuck in the 3/3. They move like turtles in the 3/3. That's usually what happens in the 3/3. 3/3 happens fast as fuck. That's what they want you to do. They want you to be fucking just relaxed, not nonchalantly, not caring about jack shit, not really thinking about jack shit. And they're going to move super fucking fast. And then use that 3/3 for the new 1/3, 2/3, or it's going to extend lower in the 3/3. We'll see. I ain't speculating on jack shit here. I'm watching. I don't care. I'm watching.
The economy and maybe what the Fed's going to do. We're going to talk about that.
If the LOD breaks here, wind direction is south officially, they might go lower for 5 or 10 minutes. Let's see here. I am not in
We'll talk to Austin Goolsbee later. I'm curious what you thought of what you heard earlier this week from the Federal Reserve.
I honestly personally want QQQ to break.
That the equity markets actually moved up on the back of this.
If QQQ breaks LOD.
You know, Andrew, I'm not, because I think the forecast that the Fed gave us in the SEP was actually quite remarkable.
If QQQ breaks LOD, it's a little bearish probably for a little bit.
27 by 7/10. So they're much more optimistic on the outlook for growth. Almost no change in the unemployment rate.
I'm not doing anything here in the 3/3.
Same horizon.
Up or down.
And the inflation rate was marked down 0.3. So I took away this look that the overall committee, the 19 members, actually are really embracing the supply side, Andrew. They're embracing this productivity story. They're embracing this idea that we can grow without creating a lot of inflation risks.
Off the last minute of the floor.
Much more dovish than the
not bullish,
was,
not bearish, still
that this
market deciding. Both sides are hoping fucking crazy. Candle just came in 1 minute, at the least 2-3 minutes, at the least.
Let me ask you then, how do you think about the employment piece of this? And also layer on top,
9:45 testing the floor here.
Come May, Jay Powell's not going to be in this role.
It's the low of the day,
Kevin
or the high of the
who
day.
You think is going to be, but
bulls are trapped, bears are trapped now again too.
Market is more than what they've indicated thus far.
So I do. I think this committee is going to turn dovish. I don't think it really matters that much who's coming in. They're going to have to do some convincing, whoever they are, on the other 11 members of the committee. They probably have some easy convincing to do and some harder convincing to do. Your guest coming up after 8 o'clock sounds like he needs a little bit of
QQQ looks like it wants to really go.
The inflation risks are less of a worry, but you know, I think everybody's that's on the list has a pretty good ability to do that convincing. But kind of your question on the employment side, Andrew, is an important one. We've seen the employment picture weaken
I'll go range at 950 looks like.
Back in the beginning of 23, we had an unemployment rate of 3.5%.
Time is 950.
We've been
950 is testing the floor in QQQ.
Almost 4% for the last couple quarters.
Breaking
over
the LOD
this
trying.
last 3 years at extraordinary rates, well above what people thought was the natural rate. And we've actually seen
there could be a bear trap in the next 5-10 minutes or soon, but wind direction is full on south now, and wind
there's something going on with AI, with whatever you want to call it, these jobless growth gains that we're getting. And I think the Fed recognized that in its latest forecast.
LOD
and
just
that's
broke
good
on
news, because they're not going to get caught up thinking
lower.
it's demand-driven growth that they need to get in front of
today
and
bearish.
stay extraordinarily
QQQ today bearish as fuck. They're trapping all the bulls on NVIDIA again.
Around the corner. Right. So I took it as very dovish.
SPX is
I'm pretty
rejecting,
excited about
trapping
the new
the bulls at
committee
the top
as
of
it
the
gets
thing
made up,
again.
and I see a lot of tailwinds coming for 2026 on monetary
wind direction
policy
is
and
south
on the
here.
economy.
I'm not chasing that.
David, personal question. Your name was on the list. We talked about it earlier this year.
9:45 into 9:50.
Do you still feel like you're even? Are you in the mix anymore? Or are you not? Do they call you and say, "Hey, you're not," or you are? What's going on here?
Candle traders leave.
I think the story is that they whittled down from
10 or
11
15
to 5,
people that have
and
left.
I think some interviews are still happening with those 5. You never know what happens.
Just because you want things
Andrew,
to be that way,
the makeup of the committee and who's coming and who's going. This is the Trump administration, and it's very dynamic.
Never.
I was very
even on this live stream or not.
In the mix and very
that's the way you
honored
think
to be in the mix. And if you get the call from the president and his cabinet members that they're interested, you go and you get involved with them. And I think it would be a wonderful opportunity. But for now, I think the mix has got down to just a couple people, and the markets are forecasting that pretty well. And again, I think all of the candidates, all 11, and many of my ex-colleagues and clients as well, I think would make great Fed chairs. And it's exciting to watch this makeup go to a more supply side.
I had 624 0 DTs today on QQQ. Wild.
In
it went
this
620
constant belief
fast
that there's
as full.
inflationary consequences
QQQ bearish today.
from excess growth. And I'm excited that those are the people that will be populating. And I hope that
really
we can
don't
convince
give a fuck. I'm up
the
4.5K in fucking 2 days. I'm done. I don't care. I'm not fucking playing huge today. I don't care. Time is fucking Friday. People mad as fucking shit. They got fucked by the market going up and down. I did fucking good, so I'm sorry. FOMC fucking wildin', bro. Who the fuck expected this shit to fucking dump, pump, and fucking dump again? So I can't lie. This is a motherfucking deductor's world, dude. Looking fucking wild into. I don't even know when this close was. Looking fucking wild into Wednesday close. Looking wild into Thursday open, and then looking wild into Wednesday fucking Thursday close, and then looking wild into Thursday close, and then Friday now too. Absolutely. Candle traders fucked, right? If they were able to play this and leave and greed, sure. Play this and leave, greed, sure. Play this and leave, greed, sure. But what's going on is the majority getting trapped, majority getting trapped, majority getting trapped because they are and not leaving at some point. At some fucking point, they are. 950. That's in the floor. No confirmation long, no confirmation short. Going lower still. IWM. I don't know where this shit's gonna go, honestly, but I don't think this shit is healthy. IWM going higher and higher and higher and higher and higher with no fucking pullback whatsoever. So at some point, I don't know if it's gonna be today, but at some point, I expect a pullback to somewhere at 250 at the fucking minimum. Like, I really do expect a pullback, like a deep pullback to 252 or something like that. I don't know if today though, but I'm just saying, if it's going higher and higher and higher with no pullback and every single day it's booming up and blowing up and nuking up with Dow Jones and other things, like it's gonna have a day soon. I don't know if that's day today. I don't know if it's Monday or Tuesday, but I'm expecting it fucking soon. IWM not even going lower on this shit. You gotta imagine, like, the day IWM goes to 252, it is GG's for SPY. SPY's gonna go to fucking 684 or something, 682. This is literally all QQQ doing all this shit. In the 3/3 now. It's literally all QQQ doing all this shit. Man. You know, the only reason why I did good for FOMC is because of NVIDIA. Right? A lot of people don't realize that too, because having set up some bigger names like this can allow you to see more than clearly than some people, like the real move and things like that. Because after it happens, nobody, like, if people aren't looking at like things like Tesla and NVIDIA, and they don't have little setups and little helpful tools like this that happen on on moves like this, there's no fucking way they're gonna see what the fuck going on, and they are just getting caught up. This is literally NVIDIA and other things, and then this is what? This is NVIDIA and the other company that went bad, right? Something, let's see. This is AVGO, and then this is fucking AVGO. Like, it's just candles coming in bullish and bearish like motherfuckers, and then nobody realizes earnings, nobody realizes FOMC, nobody realizes, and it's just all crazy as fuck. 950 is bouncing. Cycle is creating. I was wanting to go long here, but the risk is absolute. They could bull trap the fuck out of this still, and data burn or whatever. All right, there's no real confirmation long. The end volume just died. Look at QQQ volume. So bearish, and then they bought it back. So much oversold then. SPY. Playing in the 3/3. Let's see what happens if this goes higher or not in the 3/3. NVIDIA. SPX is 1/3, 2/3, 3/3 lower from yesterday at 250 into at the minimum today low at 9:50 in the morning. All right, time is 9:55 now. 9:50 bounced to 9:55. 9:55 is deciding what to do here. There is a lot of risk for bears that are stuck at the bottom of the 950 one candle until the low of the 950 candle breaks. All bears, all zero DTs, every single bear that has gotten into this point is trapped. This is the reason why when the market makes a cycle and tries to bounce and tries to show a rejection, I have no care in 0 DT or 1 DT sometimes, unless it's a super clear setup, because this is fucking pivot point trading. This is fucking pivot point trading, right? And people do not understand what fucking pivot point trading is. They just give a fuck about candles. Candle green, candle red. So it is a mistake. A grave mistake. There's a risk, long and short. This is at the middle market deciding what to do. I don't care, but this is literally what it is. A lot of people don't care about the reality, but that is the reality. Alright, a lot of bulls could get hurt, a lot of bears could get hurt. That is the reality here. There's no clear direction. Volume, everything is trash. RSI is oversold. It's deciding whether to squeeze back a little bit or not. Amazing day. Amazing day. Let's look at the opening bell.
Been a tough year. Has been a tough year.
Say the housing's in the worst in 50.
Let's get the opening bell here in the CNBC Real-Time Exchange with the big board. It is Chipotle celebrating.
Oh, the green opening today.
Been a tough year. Has been a tough year.
Say the housing's in the worst in 50.
Let's get the opening bell here in the CNBC Real-Time Exchange with the big board. It is Chipotle celebrating 4,000 restaurants. Talked to them a moment ago off camera at the NASDAQ fintech company Wealthfront, celebrating its IPO today, appearing on Squawk earlier this morning. Jim,
we got to see Chipotle stock turn. Right now, I don't think it can turn. And the reason why I think it can't is because they haven't been able to come up, other than that family-style initiative, the lower price that you need. America does not, even if it loves a brand, they use this word choiceful, completely made up. What the hell does that mean?
Everybody's using it.
Yeah, well, that's because they have never been to an English class, and they've not. Honestly, I mean, they wouldn't know the difference between Moby Dick and Middlemarch. What you need to know.
All right, today is Friday, guys. Friday rule applies. Friday rule applies, meaning every Friday, smart money expects a lot of traps, a lot of bullshit, a lot of danger, a lot of risk, no matter going up or down. Smart money is thinking into Friday. Today is the end of the week. Today is the end of the setup that they're doing. It is part of the setup still, but they can flip upside down like
look, I mean,
nothing.
one of the problems with cattle, it takes as long for them to, it's like humans. Yeah. They're like 280 days, give or take, and we're like 280 days. So if you see
955 algo range trading,
you gotta rush,
time is
you want
10.
to try to get that, but you still can't take advantage of it because of the gestation period.
All right, wind direction is trying to reject to the floor again off the 955 algo range here. I'm still not doing shit. I don't really care. I don't really even want to go south, to be honest. If they go south, I'll just watch. But I mean, if it's crazy south, I might join for a minute or two. But I honestly I don't want to say I'm gonna do some shit, but I mean, I'm trying to, right, find a big bear trap moment so that I could maybe long for a cycle or two, but I definitely would not try here. QQQ, because there's just no direction right now. SPY, no direction. I feel like QQQ should be the one doing this, but IWM, SPY is the one bulking. Robinhood.
Get over to Steve Leisman. He is at the Chicago Fed Economic Outlook Symposium this week with Bank President Austin Goolsbee. Steve, take it away.
Hey, good morning, Becky, and thank you. Just before I go, I start here. Jeff Schmidt, the Kansas City Fed president, another dissenter, out with a statement at this hour saying the reason he dissented, inflation is too high, the economy showed continued momentum, and the labor market, he says, is largely
SPX showing bearish on the 5, but
Austin Goolsbee,
I don't know.
Professor, president, and now dissenter.
Still showing
That's
bearish as fuck on SPY now.
Moniker we have for you now.
Indeed. Welcome, though, Steve, to the beating heart of the Federal Reserve System.
Are you kidding me? What a beautiful place. So let's talk about the dissent and why you decided. I guess this is your last vote until the next cycle comes around for you. Why was it important for you to vote against the rate cut?
Well, look, Steve, you know I've been saying for months, I'm pretty optimistic that for
IWM is the one making QQQ or SPY pullback.
Will be able to
is
be
bouncing off
a
of
fair
950
bit lower
There's
than
a
they
big
are
difference.
today. But I've just been uncomfortable front-loading too many rate cuts and assuming that what we've seen in inflation be transitory.
I'm about front-loading.
It's all amplified by the data being shut down. And so I just felt that we ought to wait, that we don't lose a lot. We don't
Let's see
take
if
a
this
lot
LOD
of
breaks
risk,
here.
in my
Wind
view.
direction
Just
is
wait
south.
to Q1 2026 and make sure that we're back on path to 2% inflation.
The big pushback here, though, comes from the
Showing
job market
bearish
data
as
that we
fuck
do
here.
have, which suggests that the labor market is weakening pretty
Showing
substantially.
bearish as fuck here. I am not chasing this shit.
I don't know that I see it exactly the same way, in that most of the measures of the job market have been pretty stable. And the chance that things in the job market would fall apart rapidly in the,
QQQ puts here
within
622.
1 to 2 months before we would revisit this again feel relatively low. We're in this environment where anything measured in rates, like the unemployment rate, the layoff rate, the vacancy rate, et cetera, those have shown stability. Where you've seen the number fall off has been raw aggregate monthly payroll, but that's the one with the biggest question mark because of immigration, because of retirements. We don't know what the break even is. So as we look at an environment that's been characterized, I would say, as this low hiring, low firing, it's worth remembering that's not what the business cycle looks like. You have low hiring, high layoffs, or you have low layoffs, high hiring. For both to be low at the same time, to me, that says more like
damn, I'm about to chase into a mega candle, but wow, that is bearish as fuck.
So it could pick up, you think, on the backside. Before you answer that, though, you have to deal. I'd like you to answer this issue with Fed Chair Powell, who said that when you figure in what could be revisions, the really substantial revisions
10 a.m.
to the job numbers, you could be minus now.
You could. The only thing is we don't know what the break even is on the monthly payroll. And we saw in 2023 and in 2024 on the inverse side,
622.0 DTQQQ here.
And there were a number of people saying, how could the economy not be overheating if we're getting 150, 180,000 jobs a month? And the answer was, that's a false reading of where you are in the business cycle because the break even was higher. So I think looking at these rates is a more effective way to figure out where you are in the business cycle. And they've been basically stable, cooling mildly. The hiring rate is low, but the layoff rate is also low.
But they're just putting up, Austin, you're right there. There's the unemployment rate. It's ticking up. You were at 4. When was that? Back the beginning of the year? And then, guys, we're looking at it right now.
Coming year. I'm just uncomfortable with front-loading the rate cuts, assuming all of the inflation that we've seen be transitory. There's no way around. We've been 4.5 years above the inflation target. And the last 6 months have shown no progress. And right before the lights went out, you saw a couple of relatively disturbing readings on services inflation. I just want to make sure that if we believe that this is transitory, let's not just put all our eggs in the
So I have not been sent here from New York, Austin, to get you with the program. But let me tell you what the program is.
Okay.
The program is you got these tariffs on.
Okay, wind direction is south here. Time is 10:05. Bulls are getting washed out right now. Not my fucking fault. Market is saying 1/3, 2/3, 3/3. The bulls are mad as fuck. Why? Because they're candle traders. They're looking at this shit and being like, why isn't this shit bullish? Why isn't this shit bullish? But things have changed. Things have actually changed. So here we are. LOD time is 10:05. Crazy. I left 2-3 minutes early. But I don't give a fuck. I scalped real quick because it's the 33rd. Insane work. Fucking insane work. I really don't give a I don't give a slight fuck, bro. 4.7k up from literally yesterday and today. I am fucking done. I don't give a fuck. I don't give a slime fuck, man. Done day. This shit cannot even get fucking better than this. Alright, literally FOMC, fucking godly pump dump. Alright, fucking pump pullback. You can't even get better than this shit. Like, I mean, bro, they bull chat that market closed twice in a row. Like, fucking close. Oh my god, they reverted it crazy. Using both earnings. Time is 10:05. There's no stopping them right now. As of right now, showing. Going lower at least. Candles are coming in crazy. Volume is still crazy. RSI is oversold again. IWM is going. Let's see how IWM does today. This shit might just go and go and go and go and go and go. It might go and go and go, bounce, and then go and go and go. Why? Because it's unhealthy as fuck for IWM to do this shit. Going continuously up, literally for 13 days in a row with this tiny ass up, down, up, down, up, down, up, down, up. Maybe if we dip down here and then pop back up, I would have been like, that shit's healthy. But like, this bitch is actually unhealthy, dude. I don't give a rat's ass what anyone tells me this shit is unhealthy as fuck. It's gonna pull back at some point or another. After it goes up higher to somewhere, I have no fucking clue. I think 252.5 is reasonable, honestly. 252.5 maybe in the next couple of days, but it might go higher. That's the thing. Does not mean this is the top, but what a fucking rejection on IWM. IWM dump mode right now, right? I literally said yesterday in the WhatsApp group, I'm feeling something weird on IWM, right? I literally said, IWM, if it goes higher and higher and higher like this shit is fucking unhealthy. And when did I say that shit? Literally, look at the fucking WhatsApp group, alright? Only person that have liked the WhatsApp group message yesterday night was Chris, because he's the only one that cares about IWM. Oh my god. Right? And Ashfac liked the message in the morning today because she saw it, but literally look at this shit, right? Unbelievable. But believable. Holy shit. IWM is not, this is not even a lie. Bro, by tomorrow it could be at 252. But nah, by Monday it could be at 252.8 and people would be like, "What the fuck did we just do?" And it would have fucking trapped everybody at the top. I'm not saying it's going to go lower here like that, but I'm just saying like IWM was holding insane, dude. Look at this shit. Dump. IWM dump, straight up dump. Dump. Yo, I don't know. I don't know where this is going. I literally said this shit is coming soon. I just didn't want to fucking take the chance, right? I honestly wanted to let the thing run and run, maybe today or tomorrow, and then fucking do it. But it's doing it so fucking fast. Right? It's doing it today, right? I was talking about this shit last night. Unbelievable. IWM straight up dump. And they're going into the gutters. Alright, gutters, gutters, gutters. Red Friday. Technology's red. NVIDIA dump. NVIDIA is at 179. NVIDIA dumped from 182.5 again. We are sub 180. This is a critical zone. This is bull trap. Right now, this is bull trap happening, right? I literally said there's some sort of trend line and we're testing it today, right? And then we fucking trapped the fuck out of that. Oh my god. Crazy sound. IWM today is the market leader, and we'll see what happens with IWM today. QQQ is 0.11% down. SPY is 0.5% down. Let's see if they go lower here, or let's see if this is the directional move. This is the setup. Time is 11:10. Unfucking believable. I had 624 0 DTs today, and I saw that market open. But holy fuck, I don't even want to see how much they're at right now. Oh my god. Oh my god. But this is what I mean, right? Sometimes I miss out on the 3/3 because I end up playing the what? 1/3, 2/3, and then I literally don't play the 3/3 or I play it small because of the risk. So This is literally happening in front of our eyes. This is 1/3, 2/3, 3/3. We are in the 3/3 right now. Time is 10:10. 10:10 is deciding what to do at the low of the day. Wow. They burnt the fuck out of the calls, huh? Wow. Oh my god. They burnt the fuck out of the calls. That is fucking terrifying. Oh my god. That dump on IWM from 9:55 into 10:05, so 10 minutes. 9:55 to 10:05, 10 minutes. Crazy dump, 10 minutes. 9:55, 10 a.m. to 10:10, so 10 minutes on QQQ. All other things, right, expedited at 10:05 into QQQ went first. IWM and other things started expediting like crazy at 10:05. Let's see if there is a cycle confirmation long here or not. Wow. I don't know, they could be playing theta game here on calls or... Unbelievable though, what the fuck? Oh my god, I literally said last night, man, oh Santa definitely coming just to Grinch Santa on all sides. Alfonso laughed at that shit as a joke. IWM starting to get unhealthy with this no pullback going up was the biggest message of the night. Look at that shit, dude. Now it's starting to get healthy on IWM. We're getting into the territories. We go down there somewhere. Right. Just 10-10 pushing up to 10-10, creating an algo range of some sort. Yeah, calls are fucked. Shake my head. Things are oversold here too. There's like 7 people that keeps coming in and out, in and out, in and out, but you gotta just leave, bro. It's kind of sad. Come on now. Like, please. Come on now. Oh. 2 hours ago, we've seen a lot of rethinking recently around the NASDAQ AI trade interest.
Actually, we're seeing in the futures, a lot of it being driven by the Broadcom earnings. We had a guest earlier said it's another moment of doubt for the AI trade. Do you agree with that sentiment? And then how do you play this? We have so many moments of doubt, even after strong reports.
Yeah. There's a lot of moments of doubt, and it's not just today. It's been over the last couple of weeks, and I think that's why we've seen this kind of rethinking around the AI theme. It's not just go in with any
in
AI
and out,
stock.
in and out,
It's
in
not
and
go
out
in
of the
with
live
tech
stream to mess with
completely.
my
You really
my
have to look at each
watching
company
algo
independently.
number, bro.
Look at those cash flows. Look at those balance sheets, and see
they
if
are
it
just
makes
trying
sense
to
what we're seeing
see
with the capex,
what can be
along
found
with
that
the
is right, what can be found that is
expectations
wrong,
of
what can be
these
found that
companies
is
say they're
right,
going
what
to
can
do.
be
We're
found
also
that is
talking
wrong.
about the chatbot race between OpenAI and Alphabet, Google, whichever one you want to call it.
On the YouTube live streams is what I'm saying, bro. There's thousands and thousands of other communities. Just stay over there. You can probably find something better over there.
Track metaphors, baseball metaphors, but either way, it's still early in this.
Nothing that's good that's
when you're
coming
talking
out
to
of
clients,
trying
how
to...
do you talk to them? What are the criteria to pick winners, potential winners at least at this point?
within AI themselves.
Yes.
So we're actually underweight a lot of the AI names versus the benchmark, and we're trying to spread things out a little bit because we don't want to put all of our eggs in that basket. Start looking maybe at some of the secondary players in AI. Who's actually going to put AI to work the best going forward? We've had a lot of talk about healthcare today. Maybe it's healthcare that's going to use it really well, or manufacturing, other type of industrial names. I think start looking wider than just those Mag 7 names.
All right, I want to get your word of the day. It's owlish. I'm assuming that's in between hawkish and dovish.
It is, but when you think of characteristics of an owl, you're thinking logical, analytical, deep thinkers, problem solvers, observant. Right? These are those characteristics. I think this is what investors need to be right now. You can't just say, I'm going to just look at a sector and any stock in that sector is going to do well. You're going to have to dive in and really do the work. What are the trends saying? Find those sectors where you're seeing the rotation right now in the market. When we have a little bit of a pullback, that'll be your opportunity to go in.
All right. You're also looking at the labor market and the consumer, and you're worried about some weakness. At the same time, your pick for us today is a consumer-facing stock.
I knew you were going to be confused about that.
Yeah, so what's the thesis? Is this a trade-down play for higher income people? Are going to trade down to this? If you're worried about these two things, why pick something that's
fucking crazy already? I literally joined and fucking broke that low fucking
so our stock is McDonald's that we're looking at. It's similar to the Walmart story. So over the last couple quarters,
I think IWM going to have a fucking significant pullback today somehow.
That lower income consumer at a double-digit pace, but they're widening their customer base and bringing in higher income consumers at a double-digit pace, similar to what Walmart has done. So you have that. You have value meals coming in, the $5, the $8. I mean, look, I'm a 2-8 meal with a Diet Coke any day of the week at McDonald's, and you add a 2.5% dividend. They're becoming less capital intensive, and McDonald's, it is their 49th consecutive year to raise their dividend. Lots of good long-term stories for McDonald's.
On one of them. How about McDonald's for, bro? Just fucking talking about AI. This is my house money. I'm just taking a little lotto play, basically. I wanted to do this on IWM. It's just, maybe today is the day. Maybe today is the day. We got Senator Elizabeth Warren coming out, right? From yesterday.
Everybody, time to bring in our next guest, Senator Elizabeth Warren, who is the lead Democrat on the Banking Committee. And Senator Warren, thank you for being with us this morning. From your position on the Banking Committee, thought we might start with the Federal Reserve, what you thought about what happened yesterday, and maybe more importantly, what you think about this overall conversation about who will take over the Federal Reserve next, who the next chairman will be. I know in the past you've had criticism for Jay Powell. You've called him dangerous at some points, but I think you're also concerned about what comes next.
Yeah, so look, I'm glad to see the Fed lower interest rates. I've been pushing for it for years. It helps bring down costs for families so that they are more likely to be able to afford a mortgage, so that they can pay less on car loans, so they can pay less on credit cards. But don't make any mistake. They didn't lower interest rates because they think the news is just fabulous on inflation. They lowered interest rates because they expressed a lot of concern about the job market. And Jay Powell, in fact, talked yesterday about whether or not there's actual negative growth, that's how they put it, contraction, overall in the labor market. And, you know, the long-term implications of that, both at the family level, for people not having jobs, not having job availability. We're seeing less churn, people leaving their jobs because they found something better instead, people hanging on to their jobs. That all means a lot more pressure on families. So the news yesterday, look, I'd like for it to be better news, but right now there's still a lot of red flashing lights about this economy and the Fed's response to it.
Does that mean you'd like to see the Fed cut interest rates even faster? You agree with the president and Stephen Myron that they should have cut 50 basis points yesterday?
You know, I actually keep looking at this as why don't they? And the answer is Donald Trump. He's the one who has caused so much chaos.
I'm waiting for IWM to gap fill or something and turn down, and I want to maybe add a little bit. If it does happen. If not,
they would have started cutting interest rates substantially back in March. Only
257 today. I mean, it's not
work on the tariffs. and the kind of economic chaos he was causing had caused them to delay and to delay and to delay. And another way to understand that
am at the bottom of the 330
what
or
the
so.
president's been doing on tariffs is not
What will
just
the market
a
do?
tax in
How will
the
it
sense
cycle?
of driving prices up. It's a tax in the sense of keeping interest rates higher than they otherwise would be. But of course, that goes to the other question you asked, and that is about the independence of the Fed. You rightly point out, I have had no problem criticizing Jerome Powell when I think he's wrong, and I've thought he's been wrong a lot. But I think it's important to have an independent Fed. And that's something that's shared on both sides of the aisle. Republicans and Democrats have said
that. Elizabeth.
If the president just turns around and puts his own guy in there, puts in a sock puppet, then one of the consequences of that is we will lose one more part of our economy that we've had literally for decades that keeps it working better because we've got a Fed that at least is making its best efforts to make decisions based independently on how they read the data, how they see the economy unfolding. And Donald Trump doesn't want that. He wants to be able to control it. So, for example, even if he's creating tariff chaos, he wants the Fed to juice the economy.
MACD is crazy bearish here. IWM went up fucking insane. There's so much fucking room, but they are already crazy negative here. Maybe a bounce coming here, but holy fuck.
Waller are the three leading candidates. Do you think any of them are
holy fuck.
Well,
insane pushing.
Are you kidding?
LOD time is 10:20.
One of them works directly for the president. The president controls his job. He doesn't want to give that up.
Hungry on QQQ and SPY right here. Fucking nuts. IWM testing the floor. AVGO fucking disgusting. 420. People were thinking it was going to open 420, and now it's at 366.
Of having a Fed chairman
oh my god, falling knife on AVGO. AVGO down 9.7% today.
The Republicans have spoken
AVGO down 9.7%.
About independence of the Fed, but they've been willing to bend the knee to Donald Trump over and over. So I think this is going to be one more moment. Are Republicans really willing to stand up for the principles they say they believe in, like an independent Fed? Or are they just going to say whatever Donald Trump wants is what they'll go along with?
That's fucking crazy. Oh my. 9.7% is absolutely nuts. That's even bigger than the video, I won't lie. Oh, surely that thing must have stopped or must be somewhere. Look at today's open, man. Crazy green. Look at today's market open. Crazy green.
Let's get the opening bell here in the CNBC Real-Time Exchange. With the big board, it is Chipotle celebrating 4,000 restaurants.
I think setup wins every time.
Talked to them a moment ago off camera at the NASDAQ fintech company Wealthfront, celebrating its IPO today, appearing on Squawk earlier this morning.
Literally candles versus setup. I'm pretty sure fucking setup wins every single fucking day.
And the reason why
FOMC proved it.
Is because they
FOMC, post-day FOMC, post-day and night after the post-FOMC day. I think it proved it itself.
America does not, even if it loves a brand, they use this word choiceful, completely made up. What the hell does that mean?
Everybody's using it.
Yeah, well, that's because they've never been to an English class from day and night. Honestly, I mean, they wouldn't know the difference between Moby Dick and Middlemarch.
Unbelievable bear strength today. This is called Bury Bears, right? Basically, this has to be Bury Bears, man. This is absolute.
I mean, I told this to
the video, 179. This is absolute setup control.
That's really hard to do, Jim. You were very constructive, for example, on Canada coming down.
Wind direction is south now on IWM too. They're going lower. They're going much lower. They want to fucking break the bitch on IWM.
It takes as long for them as like humans. Yeah. They're like 280 days, give or take, and we're like 280 days. So if you see
I'm adding on IWM
down, you got to rush. You want to try to get that, but you still can't take advantage of this gestation period.
Insane. They want to go lower with this fucking gap. Crazy. Fucking crazy. They're going crazy IWM, man. Insane. This is IWM day. Where the fuck are they going? Oh my god, I don't know. With the fucking 15-minute candle coming in. Insane stacking. 1, 2, 3, 4. Bigger, 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 bigger. Fucking insane IWM, man. SPY fucking insane, but this is purely on IWM. This is purely on IWM. All QQQ, everything at the same time. $10.25 low of the day. Everything breaking apart, going lower and lower. No volume, going straight up down. That is fucking IWM, man. People are looking at SPY and saying no volume. Look at the fucking volume on IWM higher time frame. QQQ2. AVGO down 10%. Fucking insane. It's fucking AVGO down 10%. Let me see this shit. 10.12%. 10.18% now. Ay, ay, ay. Wow. There is a gap here at 257.816. $10.25. I just doubled down on or not doubled down, but I added on IWM half with the gap up there into a spike, not a bounce, so. That might be FOMO, but we'll see. Everything want to push lower. Time is 10:30 now. Wind direction is north south from 9:40 into 10:30. Wind direction is south on 9:40 into 10:30. There is no divergence at the roof. There is no divergence at the floor. Wind direction is just purely south side. IWM leading everything right now. Taking charge of this bitch, going crazy down, and I'm out. $2,000.70. I'm out on IWM. Market order fill. I'm done. I'm literally done now. Done. Done. Out. Done. Oh my god. Wow, look at that fucking IWM. Right, look at that fucking IWM rally down, bro. Today is the day on IWM. I said this shit on IWM last night in the WhatsApp group. I said this shit is fucking unhealthy, going up, not even going down. Up, not even healthy. Wow. Wow, today is IWM day. Done. Wow. Jesus Christ. Jesus Christ. I can't believe they're going lower and lower with the IWM 1 minute gap. That's a fucking gap hope right there. Done. Oh my god. Fucking going insane, man. Wind direction is south still. Is absolute. This is the 3/3. This is absolutely the 3/3. This is, I don't even know. There has to be a fucking bounce coming, but I mean, this shit fucking just going and going and going and going. Today is the day. Oh my god. Alright, we have to draw Fibonacci on this bitch. Where is it going to? We gotta see, dude. I literally said IWM gonna go until the day they decide all together and they fucking gone, right? That is literally what's happening right now. It's not even at 252.81. I don't know where this is going, but it's going fucking crazy down with basically no fucking bouncing. Still. Possibly bounce coming here to gap fill everything and then get some liquidity to do something, but wow. Possibly. This should be this might be reaching by next week. The 252 point somewhere range, which is the Fibonacci. That's what I'm expecting, but what the fuck? That is how they master trap. AVGO down 10.52%. SPX is at 6,852. 1/3, 2/3, 3/3 has destroyed the 1/3, 2/3, 3/3 up from yesterday. Right, this is cycle analysis. This is FOMC at its finest. GG's in chat. All right, God bless America. Let's get some motherfucking hawks and American flags in chat. I swear to God, this is, oh my God, man. This is every single setup in my mind playing out all at fucking once. QQQ, IWM, NVIDIA, maybe AVGO, but I wasn't looking at AVGO that much. But like, absolutely, this is everything all at once, all fucking at once. Market going up, down, like motherfucking nothing. Using 6,852, so that's literally SPX2. Like, bro. like, bro, look at the crazy fucking volatility and volume coming into FOMC, and they're trapping that shit. Right? At 6,552. Let's see what happens, whether this shit goes like crazy or stays. If it goes crazy, then I can expect somewhere here at 6,776 by maybe next week. Right? The gap. Why? That would be making some sort of dead cat bounce something, but then also it could be a bounce still type of thing. But they could also not go down here too, right here. They could wait until next week, but wow. Unfucking real. Right, maybe that is what's going on right now. I have no idea. We'll see. IWM. Absolute. 258, 256. Absolute. It's the 3/3. Maybe cycle is happening. Short term, medium term, fake or real, I have no idea. But now something is trying. MACD is not crazy oversold, but it is oversold to the point that it could. I don't really go off of MACD and RSI like that alone. I wait for cycle confirmation, so I'm not even going to say this shit is looking bullish or bearish. But I'm not even going to do shit today anymore because I'm literally done. That IWM shit was literally done. So I waited for momentum. I waited for deduction. I waited for cycle confirmation. I waited for setup. And the setup told me IWM, something fucking crazy happening. I literally wanted to type in the message yesterday, right? If this shit goes higher and higher, something fucking crazy coming into IWM. But I didn't want to be biased, so I literally said, if they're going higher and higher, they're cooking something on IWM. I don't know what the exact message was. What the message was, IWM starting to get unhealthy with this no pullback going up. Right. People don't care because they look at candles. It's green. Oh, it's bullish. It's fine. And then things change. Oh, it's bearish. Oh, and then things change. That's why setups are the most important. Setups really can't change. Setups are always changing. Setups are always changed. Setups are always there for people to get set up on and also to set up itself for such trying to whatever. The market is constantly a matrix probability deciding. There's a gap here in SPX, but we filled it on SPY. That's something interesting. AVGO is the most craziest today. AVGO down 10% is absolutely wild. Alright, look at the title of our live stream. Literally 10.22% AVGO down. I want to literally type in IWM pullback, but this is market pulling back altogether. So, wow. Yeah, thank you for the American flag and some hawks. Holy crap. NVIDIA. Right, we did a poll last week. Are the bears trapped? Are the bulls trapped? And people said bears are trapped mostly. They were. And then they flipped the fuck out of it, and then they bull trapped the fuck out of it, right? So, technically speaking, we are now losing the 0.1, 0.5 Fibonacci, it looks like. Where do we bounce to? 0.382 at 182.84 into pre-market, 745. Right, that level was a level we played with for one day on Wednesday, and then Wednesday lost it into Thursday, bounced it into Friday, touched the 0.182, and then rejected, and is at the 0.5 Fibonacci. This shit is absolutely critical, absolutely Fibonacci, absolutely helping into looking at what the FOMC is doing. Because the market is setting up, market is forming, market is doing things constantly. Time is 10:30 on IWM here. You can't lie, bro. That Fibonacci aligning perfectly on fucking NVIDIA explains, or not explains, but it shows how FOMC was perfectly used. You cannot fucking lie with this shit. Like, I literally said, market is flying, QQQ is flying, and NVIDIA is looking bearish. It's weird, right? And they dropped the fuck out of NVIDIA while nobody cared, and then bullish with the market, and then down. So, with AVGO and all that. Almost perfect. I mean, it is perfect, but 1040. That is absolute, dude. Let's call it power. Set up power. Big whales that play power. Loud as hell. Wow. IWM puts all up 60% for the day. It is beautiful. Not even intraday.
More, I don't want to make it sound like you have a point of view other than you're expecting a more hawkish Fed, and Barry, you're expecting one that's a little bit more dovish. So, Tom, you're more in line with consensus right now. What would that look like, and why are you still bullish on stock prices?
Well, I think precisely because our clients are expecting a hawkish cut. So exactly as Steve laid out, you know, Fed does a cut, but future cuts are uncertain, not even maybe until June. Now, because that's the base case, then if that's what happens, of course, markets have already been bracing for that, you know, and they've been bracing over it since October. And of course, there's a chance that it's a dovish cut, which would be bullish as well. And then I think
what to you would be a dovish cut? So, are there projections? Are there dots?
Yes.
There is. So we'll know right away if they come out and those projections show that they're expecting more rate cuts next year. Then you're saying we might only get one more in the summer. That's right, and it could also be interpreted dovishly if they start acknowledging the balance of risk shifting, so that then markets can realize the Fed is now acknowledging there's some underlying fragility of the economy. And of course now QE is because QT is ending. It's essentially not QT, which is QE.
Wow, that's $10 fucking from 625.
You know, of course, the chance that there's something positive the Fed has to say. So I think it is a hawkish cut, but actually I think market reaction's positive.
And there's so much more you're queuing up here we're going to get into, but on a top level, why isn't it a bigger roadblock for markets, Tom? You know, you could look at this and just say, well,
IWM wants to go lower, but I'm telling you, this shit is one directional for now, man.
You know, and Powell's been known
until
to
the
not
fucking
have very
bears are gone, until IWM bears are gone, this shit
so maybe
is
he's even more hawkish than usual. I don't know. Why don't you think that's a bigger risk? And whether it's just my output we've been talking about this afternoon, but you know, kind of setting the tone into year end and then into next year.
Yeah. I think part of it is just the market's now adjusted to the idea that the Fed
long is fucking dangerous until IWM shows the fuck out, basically.
Now, part of it may be because that there could be undue pressure coming from outside the Fed, and the institution wants to protect its
pullback
integrity,
IWM. I said this shit was fucking
comes across as hawkish. But that dynamic is something the markets have been bracing for, and they've reacted negatively to it, like in October they did. And so I think because of that,
SPY's down
that's
0.6.
what people are building into this December
IWM is going
meeting,
lower. It
which
is
is why it could be a surprise.
It's like when Apple always gives cautious guidance. You just the stock always sells off after earnings, and then it does fine again. And they also, of course, have the post-COVID period to react to.
I'm not playing no more. I don't give a fuck. IWM is rolling and rolling and rolling, but I don't care.
I didn't reopen the door to inflation.
Right. Yeah, that's right.
For that institutional
legacy.
Exactly. So Barry, all of that said and done, there are still lots of people starting to talk about this quantitative easing issue. So it's a little bit confusing when you have. Are we to view that even as economic policy making, or is that something completely different that just has to do with the plumbing of the financial system?
So for 3 years, you and I have been talking about the Fed eased primarily using their balance sheet, but tightened using only one of 3 channels that they have, which is they've just been draining reserves from the system. And so that's the plumbing issue, which is getting tight. But the much more important and impactful part of QE is when they're buying Treasury notes and mortgage-backed securities. That lowers long-term rates, which is what really influences equity prices and other risky assets. And they suppress volatility by buying mortgage-backed securities because of prepayment.
When do you expect them to come back into the market, the Treasury market?
Well, it is not lost on me, it shouldn't be lost on any investor, that the 10-year Treasury yield has moved from $3.99 on December 1st to $4.20 since the Fed began what I'm calling DT. Duration tightening.
Oh, and no, now I'm confused.
Right,
Keep going.
Now they're reinvesting their mortgage-backed securities pay downs into Treasury bills, not into Treasury notes.
Right.
So that means they're buying 17 fewer billion per month of we'll call them 5-year Treasuries for simplicity's sake, and they're buying bills instead. And so that's putting upward pressure on longer-term rates. This is when Kevin Warsh talks about shrinking the Fed's balance sheet to encourage private sector lending, he's skipped a step in there. The step is deregulating the banking sector, lowering the GSIB surcharge, widening the supplementary leverage ratio, doing all these things that could potentially expand bank balance sheets as much as $6 trillion from the 22 or 3 or so billion that they currently are.
That they should be the buyers.
They own the debt. This is crucial in the long run.
I'll go range at the floor.
A price-sensitive buyer owns the government debt, not a price-insensitive buyer. So when the government starts spending like drunken sailors, as they did in 2020 and 21, and drive spending to 30% of GDP, they're not able to just
keep going,
finance it, and keep going. And so this is a crucial transition that needs to happen this year.
But the reason
yes, I'm dovish on the Fed cutting the policy rate to try and steepen the yield curve so small banks can participate in this process.
That's what Paul McCulley talked about. A lot of people are saying they should cut because they want to renormalize the yield curve.
That's right. So their policy rate has been overly restrictive for floating rate borrowers,
maybe halfway mark.
Russell 2000
all right, that's
companies.
fair.
You know, Tom and I have tried to get bullish on the Russell 2000 for the last couple of years.
Right.
This is part of the reason why it hasn't worked. But policy's been accommodative for long-term fixed rate borrowers, investment grade companies, relative to high yield companies, for example. So for me, it's crucial that they allow that duration to return to the wild, go back into the market, reinvest in bills, but lower that short-term rate. And
but just to put a point on that, so I can follow you when you say, look, the rate is too high, it can come down a little bit, fine. But then they also need to restart QE. Okay, I guess they do.
They're not going to restart QE. If I'm right about deregulating the banking sector,
they're going to restart.
Look at Tesla. It's probably at the gray box.
They're already basically admitting to that.
Well, Powell's not going to be chairman anymore. And integral into what Bessent is asking the next Fed chair to do is deregulate the banking sector. If the banking sector doesn't need to hold $3 trillion of reserves because the requirements don't
then they don't need to worry about the balance sheet.
Then we're not going to have tight repo rates.
Yeah.
So that's how we avoid the Fed expanding their balance sheet and interfering with the price of the most important security in global markets, the 10-year Treasury.
Absolutely, but Tom, the reason why we fixate on this, which sounds wonky, but it's not, especially if you're in the crypto world, for instance, where you hear people saying QE is coming, the liquidity is coming, buy Bitcoin or buy whatever crypto asset or buy stocks because this is coming. So it's important to know whether it's coming or not.
Comes from the banks, though.
Yeah,
fair.
But yeah, in the crypto world, QT was draining liquidity. So the ending of QT is essentially QE, because if they're just holding the balance sheet flat, they are still going to be essentially adding liquidity to the system.
Just to maintain the size.
Yes, and so that is why I think crypto prices have risen in anticipation of this meeting.
So do crypto prices keep going? Do you have a bullish view still on small caps if we're finally going to get that rate coming down a little bit? Where should people look for?
All right, guys. First poll of the day.
Or outperformance.
Flip VWAP.
Yeah, I mean, like 20
or LOD retest at some point.
Like,
again,
there's a new Fed, right? But a dovish.
What is coming next, in your opinion?
At a time when the ISM's been below 50 for a record more than 3 years, so that's really good for small caps. And as Barry says, if they deregulate banking, and we were talking about this offline, that's really good for small caps. But that's also really good for the business cycle. And we've talked about this in some of our past research. Crypto prices are really sensitive to the ISM. So the ISM moving back above 50 has historically been associated with actually super cycle moves in
Palantir
Bitcoin
and literally Tesla didn't do anything.
Going into expansion territory is positive for Bitcoin and
correct.
For all, interesting.
Look at how fucking Palantir and Tesla didn't do barely anything. Palantir is down 3%, but they fucking pumped it
Bitcoin,
and then dumped it.
Look at its distance from the 200-day. It's almost
Tesla
perfectly correlated to the ISM.
Pumped it and then
same
dumped
thing
it.
with copper to gold prices.
Look at this shit. Like, what the fuck? Look at AVGO.
Right,
Look at
but all of
NVIDIA.
that tells you that it's basically just risk on, that they're all behaving like an economy. And is that, am I overcharacterizing
Yeah, I think that's right. I think Bitcoin's a bit of a chameleon because there'll probably be a time when it acts like gold, but right now it acts a lot more like it's sensitive to monetary policy and the business cycle, and both are about to turn up. So that would mean anybody who thinks the Bitcoin 4-year cycle means
IWM trying to be bullish again too. RSI is being back.
Thinking that new highs come
being caught up now by
this holiday,
IWM. SPY maybe. QQQ is leading this shit. I don't know. It looks like it. MACD is. Kevin Hart. Kevin.
That's the headline. So that's a pretty decent year in the year ahead. Not quite as robust as we had this year. Why that target?
We have Scott saying LOD. One person saying VWAP flip. 3 people voted VWAP flip. 7 people voted LOD
I think there's
retest.
a deceleration of what the market can do next year. But that 10%, I think, belies what will be a very
none of that
turbulent
for
year,
quite a while.
similar to
Data
this year,
burning.
where
That is
this
another
year we had
high-ass probability.
And sort of a Fed that
There's a
became
big-ass
hawkish
move
again.
has been played.
Next year is a
little
year
bounce
where we
is
have
coming.
the Supreme
One
Court
directional.
potentially overturning tariffs, and then a new Fed, which will be tested.
I'm going to send the SPX
so
put to call ratio here as well.
What looks like a bear market in 2026, but we exit strong.
I mean,
let's hit that thumbs up
new Fed
and hit the like on the live stream, please. Thank you very much, folks. Appreciate it all.
What the president wants to do in terms of who he wants to appoint, that the bias is going to be towards easing.
Correct.
So why so much turbulence around that particular issue?
You're right. I think next year the real message at the end of the year will be there's the Fed put back in play. So then you have a White House put and a Fed put, which are tailwinds for stocks. But before all that happens, the new chairman has to be confirmed. It takes about 90 days from the time that his nomination takes place and the confirmation. And the market's always test a new Fed chair.
QQQ is super
so I
bearish.
think that is the January October
QQQ
period
is
that
still
the Fed
down
is being
1%
tested,
something.
even though we
in
know
the
it's
long,
going to be a
the
dovish
bigger
Fed in
picture,
effect, but we'll
QQQ
talk
is
about
still
that.
down 1.25%. For a V to occur, a lot will have to take place. IWM 1 minute gap exists here too, so it might go back up and fill it.
Everything. Isn't
intraday.
that partly what the last couple of days?
I'm not going to speculate it's going to do it, but I mean it could, so I'm going to leave it marked.
In my mind, even though people positioned it as a hawkish cut, it's actually quite bullish for stocks. Because,
it didn't though for 40 minutes.
The Fed again
1 hour.
is now weighing the downside.
You realize
risk
that,
to the
right? They
economy,
left that 1 minute gap
put
at 257 and then went lower.
Plus, as you know, QT ended, and even though it's not officially QE, it's the absence of tightening, which is QE.
I mean, you call it whatever you want. If the effects of whatever
algo
they're
range
doing are nearly the same as if you want to call it QE,
not a complete confirmation rejection. We could either be barcoding here or IWM maybe could be saying we're not going to go fill that and fucking go lower again. But I don't know.
As you highlighted, small caps hitting record highs, financials rallying. And now what we just want is the ISM to turn, but if housing can turn, then you've got a real broadening taking place next year.
See, when you still talk about a wall of worry, I feel like that's debatable now. I mean, I felt like it's debatable for the last few months, but once you get into the new year, do we really have a wall of worry? As I said, we expect the economy to strengthen. The Fed's going to have a more dovish tilt. Even with a new person, you're going to have some of the impacts of the big, beautiful bill. You're going to have what should be a better environment for M&A and even IPOs. We may get some of the largest we've ever seen from the AI space, not to mention the AI trade in and of itself.
IWM saying
is that really a wall of worry?
Well, those are definitely all tailwinds, Scott. But
in our the RSI reloaded to go lower, maybe.
Skepticism about valuations.
Okay.
Fears of an AI bubble.
Fair.
The Supreme Court overturning
tariffs. Didn't even get bought back. It's just going crazy. Candle going crazy. It's like an LOD test. There could be a lot of bears coming in here.
For stocks.
Well, it is
LOD testing, LOD hoping playing out in 2 minutes already.
Again, and the economic
this is LOD testing, LOD testing, hoping.
If the tariffs stay in place, and remember, markets don't expect the tariffs to hold, then we can anniversary a lot of the effects. But if now we're talking about them being reversed, some companies suing to get refunds, and then new tariffs coming, it adds to the lack of visibility.
So on the issue of AI, how does the breakdown happen and what leads the market to your target of 7,700 and what lags?
Well, I think tech is going to be a group that probably has to digest.
All right, until 10:30 breaks here, people holding hope is in danger, hypothetically speaking.
And we know that whenever tech starts to stall, people wonder,
right,
is
a lot of
the
people get reverted on in the
so the market
LOD
will fall,
hope
or
test,
is this
and
a
they get fucked
rotation,
on and they
that's
cry.
controversial.
They also get reverted on in the tippity top of the bullish cycle and then fucking get fucked on and cry too. So it's just how it is. It's just how the world is.
They turn bearish. I feel like this is
I'm talking about the majority of the people in the market.
A bullish story would want to be.
We'll see what happens here.
You could have
LOD testing, LOD hoping we are at the midpoint
in the tech trade, but man, if you get a pickup in equal weight and you get a pickup in the Russell and you get a pickup in all these other areas, that's what keeps the market from being upset by the lack of performance from tech.
That's a rational explanation. It makes perfect sense.
IWM full on bearish right now.
People are more bearish now because tech is stalling. And it's in the backdrop of 75% of the weeks this year, sentiment on AAII has been negative. It is only something you see
reloaded
in the
to go lower. Done.
So I think people are sort of entrenched in their bearishness, even as we exit strong, and I think that carries into next year.
Man, I mean, I don't know who you're talking to. I feel like it's hard to find people who are bearish, which is why we've got a couple people on the desk that we're going to bring into the conversation.
Oh, best believe I'm goddamn bearish. Best believe.
New Edge Wealth's Cameron Dawson.
Best believe I was bearish. Best believe because I did great with my life. For my life.
It is really hard to fight a market that's in a
I'm not a goddamn perma bear. Best believe I'm a motherfucking deductor. Goddamn, God did. Goddamn, God did. Hell yeah. Look at this shit. Hell yeah. Volatility.
For perfection.
Hell yeah.
Perfection. You have a 22.5 times forward multiple. Earnings estimates look to be very fulsome. $309 a share. That includes 200 basis points of operating margin expansion.
So fucking messed up, bro.
It is definitely something you don't
fucking
want to bet
IWM going up and up and up and up,
expansion.
literally just
However,
making it fucking troll and troll and troll and troll and troll, and then literally in one fucking day.
You are only in the 60th percentile in institutional investor positioning survey.
These people
So there is still room for people to get
tippity end.
Well, those
like,
are two different
look at the Dow Jones now. DJI.
There is the idea, as Cameron says, of
going higher
FOMO,
today or what? Fuck, DJI went
performance.
higher today in bull trap.
Then there's the realization of whether earnings are going to live up to the
IWM.
hype to justify the valuation that Cameron suggests.
0.78%. This is full fucking on bearish now. IWM wants to go lower here. Look at the MACD RSI reloaded on the 5-minute. Bulls are fucked.
I mean, I think that's what I do
they
for a
go
living.
lower.
I hear people's fears all the time.
MACD RSI crazy oversold on the 5, but they can go even on the 15.
But the backdrop
15, not
continues
even
to be quite good. You're in an environment
the
where leading indicators are picking up a bit. The Fed wants to ease. Inflation expectations are contained. I mean, it's a good backdrop. And our outlook coming into the year at Invesco was about this broadening out. You know, a lot of the
crazy candle, bro. Oh my God, crazy candle,
nice
bro.
About an environment with easing
that
and a
is
pickup
insane.
in economic activity is you can build better value portfolios.
LOD test that fucking fast easily.
Whether it's down capitalization, equal weight.
10:45. We had 7 people vote LOD retest. 4 people voted VWAP flip. Honestly,
right now,
I might have voted
higher in terms of
I would have voted neither.
I
would not. I didn't even want to vote LOD retest. I thought there would be some sort of data burn on bears, but
and look,
I don't know if I don't think I would have voted VWAP flip either. I think I would have just voted stay fucking in the middle or something. Or, I mean, one would have had to do the either clearly, but yeah, this is LOD hoping,
the Fed having to become
LOD
more
testing,
and they're not.
So this is retesting.
Credit spreads are blowing out,
and they're not.
In 5 minutes too. That's how fast this shit is. 10:50 to 10:55.
I'm very convinced that this cycle is continuing. The question that we've been debating is the direction of it. Are we gathering momentum here? And I believe we are. And as you gather momentum, you want a different type of risk in the portfolio rather than 2023, 2024, where global growth is kind of not doing anything.
All right. Well, let's stay on that theme and welcome in another guest. Jonathan Krinsky, BTIG.
I'm pretty sure this is gonna fucking roll today,
so we wanted to bring him in to talk to you about it.
1.2,
It's nice to have you, especially given this move we've seen in the last few days.
Wow,
at least
that's a lot. That's a big move for one day.
Hey Scott, so I mean, yeah, there's a couple of points here. One,
I'm not doing shit here. I'm just watching with intrigue. IWM, I already did. So SPY, QQQ can do whatever the fuck they want. They're gonna do whatever the fuck they want. 1 minute gap here.
Of a speculative lower quality breakout.
Someone coming in insane. IWM.
600 actually joining the Russell 2 and is within a very close
Tom Lee, there you go, talking about Russell 2000.
You know, when we think about
2K.
small caps, we're basically at the same levels we were 4 years ago in November of 2021. So, you know, if this breakout can hold, then, you know, there could be meaningful upside to the small cap trade.
Russell
and at the
2K.
same time, you know, we're
you heard him, right?
Moderation joining the Russell 2 and is within, you know,
a meaningful upside to the Russell 2000. What the fuck you talking about,
its own all-time highs. And
0.96%.
You know, when we think about small caps, we're basically at the same levels we were
1%,
4 years
minus
ago.
1%, minus 1%, minus 1.5%, minus 1.5%.
If this breakout can hold, then, you know, there could be
minus
meaningful
1.06%,
upside,
minus
to
1.1%.
small
God
cap
damn,
trade.
dumb! Oh
You know,
my
we're
God!
noticing some
Wow!
moderation or
One
relative
direction,
weakness
south.
in some of the Mag 7.
1.1%.
Nvidia's been
IWM
trading a
dump.
little bit poorly. Meta is below its 200
That
days.
is.
So
That I
when you
lit.
put all together,
Wow!
you
Look
look
at that
small
fucking
cap to
IWM.
Mag
I
7,
literally said
we're
that shit
now,
most likely coming,
really
right?
just
Oh my
starting
God.
to break out
I said
above
IWM
a
so
multi-year
goddamn
downtrend
unhealthy with this
that
no
started,
pullback fucking
back
rally
in 2022, 2023.
crazy candle. What
I do
the
think
fuck?
there could be some runway, and it's definitely a theme we'll be watching as we head into
Fuck?
26.
Yo, FOMO, FOMO, oh my God, FOMO, I had 624.0 DT, QQQ, I literally had 0 DT, yo, IWM fucking nuts, oh my God, it's fine though, bro, I'm up fucking crazy. And
well, yeah, I think there's a difference between relative underperformance and absolute weakness.
This is crazy. Oh my God. They're going there. 6,707.
I think the pullbacks in Nvidia and Meta are, you know, you could argue Meta is potentially changing the trends. It's probably one of the weakest of the Mag 7.
I mean, this could bear trap, but like this literally broke the candle in 1 minute and then extended the 3/3 in literally 1 minute, and that 1 minute is 30 points on SPX.
Setup happen, that would be a bigger concern for the market.
Oh my God, did he just say setup?
Now, you know, You could argue Meta is potentially changing the trend.
11 a.m. 1.1%. I literally said I could see IWM at 1.4%, 1.2% today, right? And they fucking dropped it from 0.88 to 0.76 to fucking 1%. Yo!
As it stands now, I think it's a function, and kind of what Tom was saying is maybe you get just some lagging or underperformance from the S&P. Maybe it does grind a bit higher, but 1.8% going to be in small caps.
Okay, interesting. We saw your note. We needed to talk to you about it. Jonathan, thanks for making time for us. We appreciate you. Jonathan Krinsky, BTIG. Mr. Small Cap.
Bro.
We have a good year. We're up 16%, okay? And a lot of it's been done in the last, well, not a lot of it, but a good amount of it we have watched in recent trading sessions.
Yeah.
You want to make a big call about this again? Well, small caps in 2026?
You know, I just don't want to jinx it, Scott. That's why I'm silently watching it, because every time I kind of feel confident about small caps, there's a bit of a rug pull. But it makes sense because the Fed's dovish.
I love you, Tom! Tom Lee, folks! Let's get a fucking clap in chat for Tom Lee.
Again,
Tom Lee.
Caps in 2026.
IWM dump.
That's why I'm silently watching it, because every time I kind of feel confident about small caps, there's a bit of a rug pull. But it makes sense that small caps should outperform. God, that's why I'm silently watching it, because every time I kind of feel confident about small caps, there's a bit of a rug pull. But it makes sense that small caps should outperform.
A bit of a rug pull. Here we are.
The Fed's dovish, and the ISM, which has been below 50.
Bit of a fucking rug pull. That I swear to God, that is fucking.
Small caps
bro, Tom Lee said this shit
relative to large caps have never been cheaper.
But you made the point already, though, that there's going to be this tension within the Fed complex.
I literally said last night, no pullback on IWM.
Will that also, if it leads to some sort of volatility or turbulence, as you use, won't that upset
I don't think about that Fibonacci, but wow.
Yeah, I mean, in the short term, it will. I mean, I just think next year,
I think 252.87 coming, man.
A rally in the beginning.
Not today. I don't know about today. They broke the LOD. All bulls are fucked.
20%
weekly,
decline like we had this
today,
year, but
tomorrow,
then we
all that shit.
Really strong, and maybe a rally to end all rallies type at the end.
What do you think about that?
Oh, I love Tom Lee.
Have been the quintessential here for a good time, not
Christmas
for a long-time trade.
Christmas
because since they
Santa Grinch, and then Santa at the end, maybe.
Little bursts of relative outperformance, and then they give it all back up. So you've made unrelenting new relative lows, and the reason for that is because earnings estimate cuts for small caps have been unrelenting. You came into this year expecting 40% earnings growth. You've gotten 6.
What is this
Next
level
year,
on
there's an expectation
This is the previous
for 50%
day something.
earnings growth. That's why small cap valuations on the surface look so cheap relative to large caps.
I'm not even gonna lie. I don't even know what this white line is down here. I should probably have that drawn, but it's probably something important.
50%. Rate cuts help because small caps have a lot of debt and a lot of floating rate debt, which should help with some interest expense. But again, just because consensus expects it doesn't mean
Ooh, look at that pullback on QQQ,
this
man.
idea that Tom's talking about, that you could have a bear market moment in 2026 before things resolve
IWM
themselves.
is down 1.11%.
That's not going to feel very good. You
Sorry,
agree with that?
SPX.
Let's look at
SPX is down 1.11%.
Also, because we have had an incredible ability in this market.
It's Red Friday.
And you see a couple of moments where we needed a V-shape recovery.
Going for 1.9% now, maybe 2% incoming.
Every time, including the most recent one where we now have completed the cycle and finished the V. As Mike Santoli likes to say, we've actually finished the V and we were able to close it at record high. Does that sound like
that drop at 11.
In your mind?
Oh my God, that is the ghost of all God
candles.
candles.
You have a 5 to 10% downturn almost every year. To get to a 20% downturn, you would probably need a decent amount of policy uncertainty or something going awry with the AI trade. And so my sense is it won't be the AI trade. We
are now minus 2% on QQQ.
Policy uncertainty. I mean,
we are now minus 2% on
QQQ. Since
QQQ.
Liberation Day has been increasing policy improvement
minus 2% now. We are at 6.12
towards greater clarity. I don't
You're at
personally
6.12 minus
think that
2%.
a new head of the Fed is going to drive that. Largely to your point, Scott, is because
I think Nvidia dumping on this shit too. I'm not gonna lie.
Now, if the market gets a
SPY
sense
down
that
1.2.
the Fed funds rate's going to 2% and long rates have to adjust, then yeah, valuations need to adjust in the market. But if it's, well, we may see low threes on the funds rate instead of 3.25.
Holy crap! I had 624.0 DT today, man.
You mentioned AI stocks. I mean, they
and that shit went from 1K to 1.6 at market open. I fucking should have held that shit. In that fucking at least 10K or something. What the fuck is this? Oh my god!
On this network in an exclusive interview earlier today.
Wow, IWME.
For us, even a deeper look at some of these stocks. Are we going to see more dispersion within the group? Like you can't. We talk about the Mag 7 as if they continue to trade as a monolith. They don't.
This Black Friday gift cleans your retainer at the touch of a button. No more brushing or tablets. Over 4 years ago, our team of
and they probably won't. Right?
They do and they don't. They're all largely connected to the same mega theme. So
people are saying Tesla going crazy.
I would say the answer is yes and no. It's like they're all genetically related, but they don't all have to have the same career, you know? So I don't know how to answer that.
I'm going to go see the video.
There was a time where you just
something is moving the market crazy. And I'm thinking it's NVIDIA and IWM here. But now QQQ going crazy south. Something is fucking selling insane.
They're
maybe
fighting
Meta,
with each other
Google,
for
everything. Well, probably everything.
You know, they're doing business with each other.
I literally said before FOMC, Meta and certain things look bearish. Changed it on FOMC.
Now, when we look back at the last industrial revolution, which was the internet build out, which had internet infrastructure and mobile and Cisco and switches and telecom.
Man, today is a crazy Friday, folks. Let's all hit the thumbs up on the video. Make sure we get the algos going so that new people can come in, find the video. And also, if you are a new watcher, make sure you hit the subscribe button.
So they are going to trade as a group, even if we think they're differentiated.
Do we agree with that?
I don't know what this line is on QQQ, so I'm gonna
and this
delete
is what
it.
we're seeing with this switch between
Google
and AI. Which one is better? This is starkly different than the very near monopoly businesses that these companies have been able to use to generate extraordinary supernormal profit growth. So a competitive business that's very capital intensive.
I don't know what this level is.
Lower return on invested capital, which is very different than what these businesses used to be.
So that's another.
How would you see that?
I agree completely, and I was going to use the word monopolistic also. It's a sea change, right? These are businesses that, you know, if you were using social,
I wish I held on IWM2 a little bit more, but holy fuck, was that
they're all
thing
competing in the same
Just
space.
The 1 minute gap was kind of terrifying.
It is a bit of a difference, and you see it even with Oracle, not necessarily a Mag 7 name, but one of the big hyperscalers. You know, you're starting to look at where debt to EBITDA is on some of these companies, and
I can't believe QQQ went to 612. That's the most disgusting thing I've seen.
They're all going to trade in uniform here. There will be winners and losers.
All right, it's going to be fun to watch, and it's going to be fun to
They
talk
did a $10 drop yesterday. They did a $15 fucking up. Or $15 drop, $15 up. It was like $27 move intraday, and then they move in QQQ like $12 intraday. Like, bro. Market exchanging. Holy cow. Oh my. We got all sorts of people coming in, raising price targets on all sorts of shit. Like this Broadcom and
Sectors analyst BJ Rakesh, he has a buy rating on Broadcom, maintains it post earnings, raising his price target from 435 to 450. So what was the problem there with what was said on the call, do you think, BJ?
Yeah, thanks for having me on, Sarah. So for Broadcom,
this motherfucker raised
on their backlog being a little bit, not as high as people were expecting. But also some of the Anthropic orders
on
the
God.
side.
IWM is down 1.2%,
and so that was really
1.16%.
brought the stock down a little bit. But that said, this is a stock that's growing their AI revenues 125% into next year.
That's sad as fuck because
and they are also growing earnings 45% plus year on year. So this is still where the growth is.
No, such thing has happened because the real move is down. They want to trap all the bulls from FOMC, man.
And even OpenAI
Tesla, if this shit goes to 438 today, I would not, not today, fucking 460 to 4, maybe into Monday, I would not be surprised if it opens way below, like maybe 430 or some crazy shit.
It a surprise to any of the
if the market is truly bearish here,
I think, you know,
pounds here,
if you look at
bull trapping the fuck out of everyone here too. So let's see what this shit is doing.
You're seeing a little bit of a pullback. We would actually buyers on this pullback, as I think
170 and 4 maybe. I have no idea. I don't really do pounds here without setup, so I don't really care. Couldn't care less.
To their roadmap, so shouldn't be a surprise. We would use the pullback.
SPY coming in with a crazy trap. This is a crazy trap day from all-time high. Look at this fucking NVIDIA, IWM. You know, all-time high, everything pullback. Look at this fucking shit on SPX. This is no motherfucking joke, right? Candle fucking traders are done for. Candle traders are fucking done for. Candle traders are fucking done for. I don't know what to tell you. I'm gonna keep fucking spamming that, but candle traders are fucking done for in this environment. Why? We are literally living in the roaring 20s. Just the 2020s, bro. This shit is like 1920s. They're making everybody in the world is fucking speculating and guessing like a motherfucker on candles alone. Candles are the worst fucking thing ever. Setups are the most important shit ever. NVIDIA is down 2.24% for the day. Right, look at this 180 loss. Look at this shit. You know what this means? This is what this means. They made a 1/3, 2/3, 3/3 intraday, and they're going lower to test this low. What does it mean if it breaks this low at 176? It's bearish as fuck. It extends the cycle lower. It means that it's in a bigger 3/3 cycle, and it's going to go lower into somewhere down there and then figure it out. That's what it looks like to me. SPX is down 1.24%. IWM is down 1.2%. QQQ is down literally 2.07%. This shit is not a joke. They're fucking going lower. Liquidation mode right now. Right? QQQ is down 2.07%. Fucking realize that. That shit is literally a once in a maybe fucking 2 months type of thing. Or once in a month type of shit going on right here. Alright, 2.1% right now. This shit is not normal. This is basically a dump. SPX shows it. QQQ shows it here. Today is basically the day. The motherfucking day. QQQ. Look at that fucking trap. 620. 612. Alright. We're going to look at that in the Fibonacci mark right here on QQQ. QQQ 2.1% is insane. Can't even lie. That is something that all the market doing together. Where's SPX? Did it just delete? What was I looking at? QQQ? Oh yeah, my QQQ chart is frozen. Surely has to be a bounce at some point here, but I don't know what. I don't want to speculate. There is no confirmation here, so I don't really care. But surely, man. They went to the apps. Look, I literally said this is oversold, but it's not really. And then they fucking reloaded it and went to the tippity, absolute tippity. Oh my god. Let's see if the bounce is trying or not. 1110. LOD. 1110 LOD. QQQ is at 612. This is a fucking once in a while event. Just played out. This is maybe the ending 3/3. We gotta see. 0.618 is the 610. But bro. Creating another trend line, I guess. I don't know. I'm gonna watch for the day. I'm done. I'm done for the day today, so I'm just watching now. Right, today was Friday, so I was being a little bit brisk, kind of analysis too, but
Guest is pretty bullish on the regionals for 2026.
everyone's saying they're bullish on something now. AVGO, small caps,
large cap banks joins us this morning. Erica, happy Friday. Good
regional
to see you.
banks.
Good to see you.
Interesting.
I was going to ask you whether or not the environment can get any better, but I think you probably think it can.
All these videos are old by like an hour,
especially
so
for the
realize
regional
that too.
banks, right?
All
they
these
have
news was
really
coming out
suffered from all
as
the
the shit
market
was
share
going
loss
lower
and
and
direct
lower.
lending
I
to
guess
the
they wanted to
non-banks.
put the story
And
in
last
that
Friday, the federal agencies essentially pulled back this leverage limit standard that they've had in place since 2013. And a lot of the regional banks had blamed that as much as prudential regulation for a lot of the market share decline and loss to some of these non-banks. So I think that's
Let's
good
hit the
news
thumbs
for
up
loan growth.
on the
We
live
have
stream,
a steep
please.
yield
Thank you
curve
guys.
and
We are at
likely probably getting
64
steeper
likes. We have
depending on who
150
the
people
president
here.
names
We can
as Fed
push that up
chair.
to
You know, credit
120
quality is
by
still quiet, and you're seeing activity
right now.
levels really continue to be strong. You know, additionally, we have started to see bigger deals in the space, and so I think it'll be the year where the regionals may start to join their money center brethren in terms of the rally.
Right. As for the big guys, do you think all of their, I mean, such a banner year, are all of those gains baked in?
They went down $10 on QQQ, so I mean, I personally am expecting some sort of a cycle bounce at the minimum before they even decide to go lower here. But I mean, I think that the setup has already been played. I think that the setup has been played and that we are down 2% now, so the market is slowly figuring out what to do.
Also, continued deregulation.
Just because they go down 2% does not mean it's going to go down another 1% or something, you know, tomorrow or on Monday.
I think it's too early
but
to reduce
today, Friday is
exposure,
bloody
but if
red,
you want
so
to
the
add
statistics
in money
comes
center
into play.
banks versus regionals,
Friday
I think you have to
closing
be a
green.
little bit
Monday
more,
is more higher than
you know,
not
stock
to be
selective,
green.
and
It's like
we
13 out of
do
26 or something
continue
like
to
that.
like Bank of
18 out of
America
26.
here. No, Bank of
Market
America has
closes red
underperformed
on
250
Friday.
basis
Market
points
tries
relative
to
to the
be
other
red
money
on
centers
Monday.
since it's an investor day, and for a cheaper valuation, you can get everything that you want in a money center bank: the capital markets activity, you know, the margin expansion.
I could definitely see maybe a possibility of a small, medium chance bounce, but right now, no confirmation.
A much cheaper
and the risk
starting
is
point
still
from a
high.
valuation perspective.
Long or short Friday rules still apply
for
everything.
So economy. But why haven't we seen all of that stuff happen?
That's why they're doing this shit on Friday, technically speaking, dude.
Than where it is?
It's like
that's
fucking
a really
perfect.
Great
Everything's zero
Actually,
DT.
it
Everything's
hasn't
like
relative to the money center banks. So the money center
everything
banks have
unsure,
done a lot
everything
of
literally
indirect
max
lending
ready.
or non-depository financial institution lending. So as opposed to directly lending to the company, they lend to the fund that lends to the company. And that has been a big fuel of outperformance of loan growth for the money centers. In addition, the consumer continues to be pretty strong. And so that's translated in credit card growth. And that's simply a money center catalyst and not a regional bank catalyst. So as we think about some of the provisions in the big, beautiful bill that's supposed to drive
big, beautiful
increased
IWM,
CapEx,
dude. I
and
literally
again,
got in fucking
you know,
here
I
at
can't emphasize enough
257.
how much
I
the sort of
literally
leverage
left
lending
down
limit
here
getting
at
pulled,
256.
could be a factor for
beautiful
next year.
IWM.
I think that's where you
Unfucking
start to see
believable
direct
IWM. But I mean,
lending
it's really
catch
believable
up.
because I was
Additionally, if
literally
the yield
seeing at the
curve is
shit, but like
steep,
to
then
be
bank
in that
balance
moment,
sheets
man,
could
to
be a
fucking
better, cheaper
oh my
solution
god,
than going to the
fucking
debt
deduction.
markets in
I
terms of
literally
financing.
deducted this shit that it was possible in the next one, you know, maybe Friday, Monday, Tuesday. Possible, but like, bro, it is actually perfect, right? But how the fuck are they gonna go up again and then do it? They literally almost can't. So they literally almost fucking can't. 260 fucking midnight. This shit making it look fucking crazy scary because what it could pop up and test it intraday, but no. I'm telling you, bro, they do things to make people hope in this and this and this, but there are always deductions. And the reason why deductions exist is because once it's happening, right, smart money deductors like to not fight the trend. They actually like to work with other wind direction following smart money deductors when the moment is deductible, and then they do it, right? They don't really just do shit on fucking anything, meaning literally undecidable moments or candles or no setup or whatever it is. But Oh, wow. What a ending to the week. What a ending to the week. QQQ is exactly 2% at 613 here. SPY is 1.22% red here.
With payroll specific
on a Friday, so that options are very, very close to expiry. All things are almost literally to the max.
Tailwinds for PE going into 2026. Joining us here at Post 9 with her private markets outlook is Anastasia Amoroso, Managing Director and Chief Investment Strategist for Private Wealth and Retirement at Partners Group. Good to have you. So why do you think the tide turns for
the market was super one-directional, right? There was many times where many, literally every single fucking moment was just down.
First of all, if you look at transaction volumes, we're estimating they're going to be up industry-wide about 35% year-over-year. So that gets us in the U.S. almost back to the levels we saw in 2021. In Europe,
I'm pretty sure up there here too. I was like, I could see 680 at this point if they're crazy bears today. But wow, I mean, I don't fucking know, dude. It's absolutely fucking insane to see that fucking spike candle literally came in crazy at 10:58, 11 a.m.
Especially is rebounded by about 70%.
11 a.m. candle was the most insane candle.
You have a better exit environment, and so that's really quite supportive.
I was already expecting it, but I mean, still.
Of private equity firms,
lower.
Or private equity-backed companies, I should say.
QQQ is down 2.16% now, lower. IWM wants to go lower. IWM is leading the charge today. IWM is down 1.48%, 1.38% today. All right, small caps going lower. This is a
QQQ they're not even private
dump.
Equity companies. I mean, they are, but that's part of their business. But
all right, 2.2% QQQ dump.
So large, and there's been some concerns around that.
Small caps
some of them
pulling
have
back.
like insurance companies inside of them as well. So.
Yeah, I mean, look, there are a lot of private markets platforms that have been created, and for us at Partners Group, we have exposure to private equity, private credit, also infrastructure, real estate, and royalties. But I want to address the private credit, part of it because we get a lot of client questions around it. And look. A lot of the issues, a lot of the headlines
QQQ is down 2.21% now.
Are idiosyncratic. Sometimes they're not even related to private credit. They're related to the broadly syndicated leveraged loan market. But if you think about, Sarah, what happened to the growth of private credit market, it was about a $600 billion AUM space. It is about $1.7 trillion today. So just by virtue of sheer growth in the market, you are going to get more headlines. You are going to get a lot of those idiosyncratic reports. So that's the first thing I would say. But if I look at the default rate within private credit, for example, especially if you are a PE-backed company, that default rate is still lingering around 1%. So it's not actually risen, much at all. If you're a non-PE-backed company, that default rate has been going up.
Can you believe it, dude? Was I not streaming the damn fucking video the whole time? Damn, can you believe it, dude? Believe it. The market did. 2.2%. I'm feeling so much FOMO. I had 0 DT, 624 in the market open. I literally saw that market open, but oh my god.
Get to Kevin Green, who joins me now. We've got no macro data to chew on, but we have had a number of Fed speakers sort of hitting the tape this morning, getting thoughts on, how things went down in that FOMC meeting earlier this week. We heard from Schmidt, we've heard from Goolsbee as to how they see things moving forward, the reasons behind why they dissented as well.
Are they really about to go wild today, man? Like 2.73%? I have no fucking clue, but holy shit.
Well, the rotation
it's almost so perfect because IWM has so much room.
30 minutes ago or so, we are starting to actually see that
1.4% now IWM.
60% of the stocks in the S&P 500 in the green.
Doubled.
You are also seeing the S&P 500 equal weight, for the most part, trading flat to even negative at this point in time, which is a little bit different than what we've seen over the last couple of trading sessions here. So this is a little bit more of a risk-off day. Let's see how much we could actually move to the downside here before buyers start to step in. Volatility got very cheap. We had a 14 handle on the VIX, which is relatively cheap. Usually, especially this year, once we had 14 VIX, we don't usually stay there for too long. Maybe a day, maybe 2 days, and then we start seeing it re-rate higher. So volatility is actually relatively cheap. Technology continues to get hit. We have the Broadcom earnings. You also have some other technology stocks like Oracle selling off here today. And once again, that rotation trade a little bit weaker. Maybe volume kicking up here a tad bit over the last, let's say, 5 minutes or so. That's what I'm seeing on the E-mini S&P 500 futures. But overall, this has actually been a decent week. And next week, what we really want to be able to focus on is not only just the economic data, but the commentary coming from the Fed. You talked about Austin, Goolsbee, Schmid. They kind of talked about the fact that their inflation risk and the fears that they have and what they're hearing from their partners is a little bit more elevated.
Unusual. 2.18% is something unusual.
A little bit more cautious on cutting rates. But we will have other Fed speakers over the next week or so that gives their commentary. And let's see how the yield market actually reacts. If you kind of look at it, Sam, we are actually seeing yields moving back a little bit higher, pretty much trading at the same levels that we were at before the Fed meeting. That's kind of a telltale sign, especially with the dollar kind of weakening over the last 24 hours.
Yeah, it certainly is. We're at levels of 419 right now on the 10-year benchmark, which is certainly interesting, particularly given that, as you point out, it takes us back to sort of the pricing in the market ahead of the rate cut on Wednesday. So, as you say, a little bit more risk-off kind of day we're seeing here, as you pointed out too with Goolsbee. It seems like they're just a bit uncomfortable with the front loading of the rates, but I'm going to be speaking to Ben Emmons all about that in the next block. But as we just get back to what we're seeing as far as individual stocks, as you mentioned, tech coming off a bit, a nice day for the Dow. I mean, you've got components like Nike up, UNH, Disney, Mickey D's, etc. As we do see sort of, as you say, the rotation continuing, but just not as extreme as we saw yesterday. What are you seeing as far as volatility is concerned?
Yeah, when you're looking at the volatility index or the VIX here, once again, we're seeing a small re-rating to the upside here, but it's still at a
2.7% in the video as well.
What we've seen pretty much all year, getting closer to
this is the cycle extending that we talked about.
Downside when it comes to volatility, or if you're just looking at prices, it's probably a little bit too cheap compared to the economic data that we are going to see next week. We will have some employment data coming from the ADP, or coming from ADP. We also will have some housing data in the mix. I'm not sure if we're going to get the inflation data. It's on the calendar,
absolute. Dr. Barry in control here.
So I'm not sure if we're going to get that, and then we will have some Fed speakers. So I think next week we still probably will have, for the most part, a little bit of a volatile week. We have VIX options expiration on Wednesday, so the last trading day for the VIX will be on Tuesday. Usually vol re-rates a little bit higher because of that. And then we will have a quarterly expiration on Friday, so a significant amount of notational value rolling off in the market, not only on the index options like the SPX or even the NDX.
Holy crap, our pull at 10:45, dude. Our pull at 10:45 was the most craziest. We did the pull here at 10:45 in the morning. What is coming next? 7 people voted LOD retest and 5 people voted VWAP flip, bro. Oh my god. LOD fucking retested, they do, and break through the fucking floor and dump it.
Yeah, absolutely. Healthcare very much catching a bid, certainly as far as the performance this week is concerned. You mentioned we're going to be getting a lot of data next week hitting the tape. Obviously, we've got a couple of other earnings to get across next week as well, the likes of Micron, Nike, FedEx, sort of among the sort of big names that we'll be keeping an eye on. But let's just switch gears to what's going on in commodities. What's happening with natural gas this morning?
IWM can chop here, and then cycle, and then figure out what to do, honestly.
Looks like there's some headlines.
Move has already played.
The potential for some warmer weather here. It's certainly not the case in the financial district of New York. But
the best thinking this shit's going to go to 2-point-something crazy%, but it already did.
Unfortunate for you, Sam. It's about 55, almost 60 degrees here in Colorado. We're loving it. Look, we are seeing natural gas pull to the downside here. We had this aggressive move pretty much this time last week, actually, and it was actually more of a short squeeze when you're looking at the markets. The options market was really aggressive in the bid, and we kind of got a little bit outsized. We
remember the news? They said, right, big money players were hedging downward yesterday. The market went lower, and they pumped the crap out of it, and then they exchanged hands, and then what? Dumped the fuck out of it.
On a relative basis, and a lot of that weather premiums now.
What are we talking about? The FOMC rally at 2 p.m. Look at the MACD volume. You cannot lie with the MACD volume. The FOMC rally at 2 p.m. They dumped it at 4 overnight. then,
because
right,
eventually
smart money deductors left, most people didn't, and then they get fucked, and then they go bullish. Smart money deductors left, most people didn't, most people go bullish here, and then they get fucked in the 3/3. Look at how low the 3/3 went, right? This was literally here, and it got extended at 11, and it got extended all the way down here. Now this is 1/3, 2/3, 3/3. This high is not higher than the FOMC, so it's not 1/3, 2/3, 3/3 from here. It is literally 1/3, 2/3, 3/3, 1/3, 2/3, 3/3, 1/3, 2/3, 3/3. In Wednesday, Thursday, into Friday in 3 days. Right. Up, down. We did that 4 times. We changed directions 4 huge times in 3 days. Realize that. That shit is fucking rare. Only possible due to AVGO, NVIDIA, IWM setups, right? Big 4 directional changes like that, like 120 points on SPX. 120 points on SPX. We were 6,903. We are 6,811. That's 100 intraday points. You call that shit 100 intraday points. 100 intraday point. Yesterday, because we went down and then went back up. So that's literally 140 points yesterday. We just did 100 points on SPX.
ICE vehicles, if you will, or combustion vehicles, traditional combustion vehicles, that actually can boost.
See what happens. You basically do the calculations by looking at the entire move, down and up or down. So
we could see the administration next week, the U.S.
Yesterday was still volatile in this, in a way. Today is just one direction going straight up dumping. Yesterday was just a dump and a pump.
That we've seen from the automotive players, the GMs, Ford, things of that nature. So the industrial trade and the metals trade continues to expand, and now it's more in the industrial front rather than the precious metal front, at least for now.
Yeah, we are seeing platinum up.
All right, guys, we're going to do our last poll and our second poll today. If you think this is going to bounce to up, say we are going to bounce. And this is the LOD. If you think that this is a fake LOD again, say we're going to go lower. All right, this is the last poll of the day. I am getting off soon in an hour. I'm not going to fucking sit here and fucking be tempted with my fate, so I'm gonna be real in like an hour or so. What is next in your opinion? This is a market sentiment poll. None of this shit means jack shit, right? Candles are literally gonna sway people up and down, right? Let's see. Higher or new LOD. Lower, bounce, lower, right? People are mixed like crazy. In the WhatsApp group as well, 3 people voted higher, 5 people voted lower. I also want to vote lower on the red candle, but I just don't think how and where they're gonna go. But I mean, if they want to show a crazy dirty number on QQQ, maybe, I guess. But personally, my heart doesn't want to vote lower. My mind wants to vote lower. I don't want this shit to go lower today. I want it to kind of close here, but I don't fucking know what the market wants to do. Right? So many bears here they could chop, but then they've been eating calls. So the environment is very different. Intraday versus multi-day almost. So many bears here, probably. Or it's so slowly and so violently bearish that they just took profit and they left, and like they have no problem going lower and lower. So, right. Lower, bounce, lower, higher, late day pump, all day go lower, all day go lower, chop then bounce. Right, 9 people voting higher, 7 people voting lower. Wow, lower looks terrifying. I'm not gonna lie, we went so low already, but I mean, in my mental mind, I would personally say it's terrifying for me to think about going lower, but I mean, I'm here to watch, so I guess we're about to see something crazy. on the market, maybe, by going lower. I don't know. Candles are showing lower, but I don't personally trust it, nor do I even want to. I'm not tempted here because the MACD is not that much crazy. But then they've been doing some crazy shit like this, so I'm not gonna lie, I felt big FOMO here when that candle happened, but not that I'm gonna start fucking chasing into it, right? But I literally did, and now they are. Wow. 1.5% IWM. This shit is just reloaded and reloaded and reloaded to really go today. 1.5% IWM now. QQQ is 2.1. SPY is 1.3. Alright, let's hit the thumbs up on the video. Thank you. I have no idea what is going on with this in the WhatsApp group. Someone is just spamming their AI meme pics. So I'm gonna delete all that real quick. Time is 11:36. Someone just posted like 6 or 7, I don't even know, some artificial intelligence thing in the WhatsApp group. But man, I literally have asked to not post GIFs, not post emojis, not post some things like every single day for the last 3 weeks, right? People just don't care. I'm kind of sorry to say, but I mean, I can't do anything about that. It's been a long, long time that I've been saying the same thing over and over and over and over and over and over again. So clearly, some people are just not there to read what they need to read or hear what they need to hear. Right? I don't need to have rules written so that people need to literally just read it. I mean, if they're here and they listen, right? I say this shit constantly, 24/7, then they are here and they listen, right? If they aren't, they're clearly not there and they just want to use the WhatsApp group for whatever the fuck they want to use it for, which is not my concern. So the WhatsApp group is a community of folks that are trying to learn and educate themselves in ways that they want to. So yeah, I don't think people understand what I'm trying to say about that, right? They really think that it's something else, but I don't know, dude. It has never been anything else but literally that. Going lower, trying. Let's see. 1/3, 2/3, 3/3. Where the bears will stop, right? They could go here. The gap at 6,777. That is more likely at this point than not. It is so goddamn bearish. QQQ is now down to 2.2% again. Wow. I'm not gonna fucking do shit on price action. I used to when I was a kid. I used to a long time ago, a year or two ago, but I don't do jack shit on price level anymore and price targets and price whatever the fuck. I really don't give a fuck. This is the 3/3 cycle and they're going lower. I really care about the cycle analysis and setups, right? People really don't give a fuck because they care about the candle. So, I mean, at the end of the day, we all live different lives. That's up to them. That's not up to me. I only care about the shit I care about. So, you know, it is what it is. But what I will say is that is literally how it is for the majority. So do realize that before it's way too late too, if you want to or not. But that is literally up to the individual at all times. IWM is down 1.6% now. This is 11:40. Today is the day for IWM. IWM is wanting to go to 252.78. Unreal, but real. Unbelievable but believable. Why? Because that is my deduction, and once they do it and the market does it first, the market goes first. I'm not sitting there and hoping and speculating it's going to do it. Market does it. I can see what's going on. I can deduct what's possible, what's going on with the setup, what's possible, and I deduct with the trend direction and the wind direction. Candle traders, absolute death, right? You thought this shit is literally a one-day candle trading thing? Nah, it's motherfucking candle trader death, liquidation every fucking day, every week, every month, every single week, every single year, every single goddamn day of the day and the month and the fucking time. So, man, I love it. I fucking live it, and I fucking breathe it. I breathe what I think about. I literally think about it 24/7, and I literally live what I breathe about, man, because I fucking talk about the shit I only fucking know, right? A lot of men talk about bullshit, or a lot of not men talk about bullshit they don't know, right? And none of that. I don't want no fucking time wasting. I only talk about the shit I know for myself. So, absolutely unreal, but today is godly. Yesterday is unbelievably amazing too, but today is godly. QQQ is down 2.25% now. Let's see where this shit goes. 2.25%. Unreal, but real. 2.25% QQQ from all-time highs. IWM down 1.66%, almost 2%. They're about to go to 2% almost. Fucking wild. Unbelievable. I was in 257. I literally scalped to like 0.76. I don't even fucking know percent, and it literally went double. Insane. So fast. Third hour candle coming in bearish. MACD volume bearish. Bulls got trapped all of last week. The entire week of last week, now turning into a bull trap after it. Bear, bull, right? But most people don't leave. Most people actually get it at the tippity top. Most people get back in after they've done good, bad, good, bad, good, bad, long or short, and then they look at the green candles and they're like, "Oh, this shit is bullish into all-time highs," and then they get back in the 3/3. And if you really, really look at the 3/3, what is this forming as? Right? Somebody please tell me what this is in the higher time frame. This is 1/3, 2/3, 3/3 playing out at its finest, right? 1/3, 2/3, and 3/3. That's all it is, right? Cycle is always cycling, and there is what? Medium, smaller cycles within bigger cycles. People were getting fucked on and played on with candles. This is what I mean. Candle, candle, volume, going bearish, yet candle comes in bullish for 2 days. What does that mean? They squeezed the fuck out of it. The price manipulated it. The price went to all-time highs for 2 days in a row. And they fucked it. That's what it means. You call this a all-time high revisit. You call this a, right? Nobody knows if it's a dead cat bounce or not, but it's going back here. What would that mean? Then it literally means this could be a dead cat bounce or a bounce. Nobody still knows. Market's still deciding. But somewhere here now. Most likely. Most likely. But damn, is it dirty? They did it. 1 day, 2.2%. 1 day, 1.6% in 1 day. IWM. NVIDIA is what? 175. That is 175 power. Dr. Barry power. The Burry Bears. The fucking Burry Bears. And I got up at 6:30 today, went back to sleep at 7:30, and got an hour of nap. It felt great. A lot of people watch the live stream and never hit the thumbs up, bro. It is what it is, but hey, those that are continuously here supporting and hitting the thumbs up when I do ask, thank you so much.
Welcome back to Morning Trade Live. It's time now for the big picture. So let's welcome in Colin Martin, head of fixed income research and strategy, Schwab Center for Financial Research. Happy Friday to you, Colin.
I'm about to go eat good.
I just made you hungry as well. But the 10-year yield right now at 4.19. It looks
like
some of the Fed speak that hit the tape this morning could have something to do with that. Is that what you're reading into it?
Yeah, I think a little bit. We got a little bit of everything with the Fed officials this morning.
I'm probably going to eat at home.
An unexpected comment from Schmid, who dissented. We kind of know where his views are. We got Philly Fed President Paulson, who will be a voter next year, which is something we're really going to be paying attention to. Who are the outgoing voters and who are the incoming voters? And Paulson, who's relatively new, said she's focusing more on the labor market than inflation. And then we got some mixed comments from Austin Goolsbee of Chicago, who he dissented against the rate cut this week, suggesting no cut at all, which hints a little bit hawkish. But then he expanded on his views a little bit, and actually he sees more room for rate cuts in 2026 because his views were more about some things he saw before the government shutdown, and the lack of data just didn't give him enough conviction to really get on board with the rate cut right now, kind of under the cloud of uncertainty. I think you need to take all that at face value, and that there is a lot of uncertainty right now. And when we look ahead to 2026 and we look at that median dot that we get from the various Fed officials, that's a long time away. That's a year-end 2026 estimate, and a lot can change between now and then. So I think we're going to take that wait-and-see approach that Fed Chair Powell hinted at. And as it stands right now, the labor market's cooling but not cracking, and inflation's just a little bit too high. That allows them to be a little bit patient. If we see a market deterioration of the labor market, maybe we get something next week with the non-farm payrolls report that's a little bit more negative than markets are expecting, then we'll probably begin to see pricing of a more aggressive rate cuts. But until then, I think the Fed can take a wait-and-see approach and see what the incoming data tells them.
Yeah, let's switch gears to that, because obviously a lot of the Fed speak is important to get an idea of, the diverging views that we are quite privy with at the moment, but just how they're feeling about things moving into 2026. It does seem that Goolsbee is just a bit uncomfortable with the pace, the front loading of the rate cuts that we've seen. So I suppose that's important. But the jobs report on Tuesday, how consequential could this be as to how the market prices in exactly when we could potentially get that next rate cut?
I think it can be consequential, especially if it comes in a little bit weaker than expected. Because we saw a little bit of a repricing following those comments I mentioned about a wait-and-see approach, and that the Fed's kind of well-positioned right now. If it's a negative report, we'll probably see expectations of a sooner rate cut.
I think having the title as 2.26% is fucking OD.
It's going to be somewhat of a messy release, though, because
maybe I should just put it as 2%.
Like
it's fucking OD.
Non-farm payrolls, but we're not going to get an unemployment rate. And then even for November, you could argue it's going to be a little bit incomplete because part of the data collection period, the government was still shut down. So it's going to be messy. I think we'll probably see some volatility after the initial release as we look at the headline numbers. But then as the minutes, days, hours go by, where we can kind of see what the actual details are, we'll probably get a better read. We're going to be looking at the unemployment rate. And that's something we've been focusing on, because even though we've seen a slowdown in non-farm payrolls, you could argue
decent size candle. It's not the biggest, but
late in the cycle. When you look at the unemployment rate, yes, it's up from its recent lows over the past few years, but it's still pretty low by historical standards. It wasn't that long ago that many economists would say an unemployment rate of around 4.4 or 4.5% is full employment.
Wow.
So if it continues to kind of hover where it is right now, we think that's a good thing. We think that wouldn't necessarily cause the Fed, just a 4.5% unemployment rate, to continue.
I think they're leaving Tesla and Palantir into next week. I guess so.
For us, so we're going to be paying attention.
Another
to that
setup
as well.
or something.
Okay. The income part of fixed income has been good for investors this year, particularly on the shorter end with those rates coming down, certainly outperforming the longer end of the equation. But I'm just wondering if this is likely to continue and what you're sort of talking about clients and about heading into 2026 as to where some of the other opportunities are.
Yeah, it was a pretty good for most bond investments this year. You got income returns, that's what bonds do. And then you got, for most investments, you got a little bit of a price appreciation. So it's good to kind of separate those out when you are investing in bonds. We know bonds can be confusing for a lot of people, especially over the short run, what drives returns. You get your income payments, and then you get potential price increases or decreases depending on the direction of yields. So it was a good year this year. Income impacted the total return more than price appreciation did. As we look ahead, we think that trend will likely continue. Income will probably be a smaller portion of the total return, though, or the income return will probably come down because we have lower yields now than where we were a year ago. In terms of price appreciation, we think most high-quality bonds should continue to see some price appreciation in 2026, mainly because the direction of U.S. high-quality yields
so much power
given those potential rate cuts. Now, in terms of
holy
other parts
crap,
of the market,
so much power.
Not everyone will necessarily get the boost of price appreciation as those Fed rate cuts come to fruition, especially the riskier parts of the market. Because if we do continue to see defaults remain somewhat elevated, you get some sort of credit loss there. That's what we saw this year, where we saw high yield bonds, bank loans, things like that. Their price gains were a little bit below the higher rated parts of the market. We think that can continue next year.
Okay, Colin, thank you so much. I appreciate it as always. Happy Friday to you. Have a great weekend. I'll speak to you next time. Colin Martin there, Head of Fixed Income Research and Strategy, Schwab Center for Financial Research.
Alright, I'm gonna stop fucking around with the fucking title. 2.16%. That's what I'm gonna leave it as. I don't know. Keeps fucking going up and down. I don't want to fuck around with it, man. This is...
BS Alignment Partners Managing Director Ali McCartney, who's here at Post 9. It's great to have you back, Ali. I mean, people did point out we were able to get to all-time highs without the benefit of AI yesterday. And can that broadening continue?
So when you think about what has happened this year, what 2025 has done, there are 3 stocks, Broadcom being one of them, that have done more than any other in terms of contribution to the bottom line. So you have 73 stocks that are sort of AI levered, and they've represented 81% of the market performance in the U.S. this year. So when you have a day like this, and when there is slight risk off in everything, you pointed out what treasuries are doing, which makes sense, taking gains, whether
slight risk off on everything.
Into the end of the year. Without these tech stocks,
oh my God,
you can't really keep the market up right now. Whether you call that the momentum trade, whatever you
call that the motherfucking Dr. Burry trade, the motherfucking momentum trade. You're you call that the motherfucking deduction trade. You're I love her.
There are going to be 3 things that are going to keep this market going, and all of them, in a sense, have been tested this week. The first is the Fed, right? The second is the feasibility of AI, and that has to do with a lot of the issues that we're seeing. Is there enough land? Is there enough energy? Can we make enough chips to get this going, to start to see monetization spread throughout? And then the third is
the AI trade extends sell-off.
Come in mostly in the first
they
quarter.
call it the AI trade
so,
these days.
We're going to have ups and downs. We're going to have some winners and losers. We're going to have a change in leadership, whether that change is from growth to value, which is possible, whether it's to small caps or whether it's simply within the AI universe. I do think you're going to see that next year.
But you came on here and you said I'm ridiculously bullish.
That's a lot.
So, look, I do see that next year.
But you came on here and you said I'm ridiculously bullish.
I can't figure out 2 things, which are A, if you are not bullish, then where do you put money right now? Do you put it in gold? Do you put it in silver? Do you put it in bonds?
What a retail ass answer.
Yes, they worked, and they will continue to work. Do you put it outside the U.S.? I do think next year is going to be another great year for emerging markets. And I think that, again, like when you look at the tailwinds, you have fiscal tailwinds, You have Fed tailwinds. I guess the question is becoming how profound are those Fed tailwinds? You have a strong consumer. You have AI. You have a weakening dollar, which helps earnings boost even more. We're looking for 11% next year. So I don't know with that setup how you get bearish.
She's talking schmack on all bears. She said, yo, you bears are so stupid. How you gonna be bearish? How you not gonna be long and you don't know where to put money? Oh my god, she said.
Hey, Carl, this is in regards to OpenAI's $300 billion deal with Oracle. Reportedly, Oracle now, some of the data centers for OpenAI will be delayed to 2028 from 2027. Now, that's according to Bloomberg, attributing the delays to labor and material shortages. Separately, there's a new 10Q that was filed from Oracle that actually shows more data center leases from the company. A credit investor I spoke to tells me that this number increases the likelihood of Oracle going to the debt market sooner than expected. The estimate was halfway through 2026, according to people who follow this company, but now this credit investor says it would likely happen earlier next year. I reached out to Oracle for comment. We are looking at shares of Oracle trade lower once again, down 5% after losing 10% yesterday. And we've been seeing this interesting correlation between the stock and the credit default swap, which is once again moving higher today. So keep in mind just how the story involves not just the move in the stock, but what the credit story, how that's influencing where the stock is moving. We'll keep an eye on this one, guys.
What else, dude? Just bring it all. What else, dude?
Stocks like Tilray, Aurora, and the Advisor Shares ETF. Cannabis
They
stocks like
destroyed
Tilray,
for 2
Aurora,
years.
and the Advisor Shares ETF are all soaring on these reports that the president will move to reclassify marijuana as a less dangerous drug.
Wow.
Brandon Gomez has been covering the story for
on
what feels
Tilray
like
in one
forever
day.
and has more on the timing of this news. Hey, Brandon.
Hey, Carl. Yeah, that's right.
People
I feel like
were
we've been
waiting
here
3
before,
years.
right? But with the president
Since
wanting to
2022.
reschedule the drug to a new classification. Now, it is currently scheduled as Schedule 1. Now, that's on par with heroin. Down to Schedule 3 is what the president wants to do, the same as Tylenol with codeine.
Wow.
So why is this time different? Well, sources have told me that the president is actively drafting an executive order to be issued as soon as Monday. Now, it would advise the DOJ and do the same as Tylenol with codeine. So why is this time different? Well, sources
Schedule
have told
3.
me that the president is
more on the timing of this news. Hey, Brandon.
Hey, Carl. Yeah, that's right. I feel like we've been here before, right? But with the president wanting to reschedule the drug to a new classification. Now, it is currently scheduled as Schedule 1. Now, that's on par with heroin. Down to Schedule 3 is what the president wants to do, the same as Tylenol with codeine. So why is this time different? Well, sources have told me that the president is actively drafting an executive order to be issued as soon as Monday. Now, it would advise the DOJ and the
crazy
DEA
thing
to
is
move forward with
Tilray went up for a couple of
White
days
House
before this
so far
news came
saying
out
no
yesterday or
final
today.
has been made yet. Now, I did speak this morning, though, with Tilray CEO Irwin Simon, one of the largest cannabis growers in the industry. He believed this time is different from past promises, telling me after many false starts, he is, quote, more optimistic this time around, adding he believes there will be change by the end of the year. Now, Carl, let's say we do get the executive order on Monday. What's next? Well, the DOJ and the DEA will publish a final rule. It'll then enter a 30-day waiting period for any challenges. We did just get a hemp ban in the government spending bill, so we know opposition is out there. And then any litigation would result in further delay of the process. So as it goes with cannabis, and as you mentioned off the top, 2 steps forward, possible 4 steps back. One cannabis lawyer, though, telling me that this is the beginning of a, quote, new era of public health policy, but that this would be a partial victory with legalization and regulatory hurdles still ahead. Still, major implications for health regulators, retailers, investors, banks, of course, and the like, as we always discuss when we get these cannabis headlines.
That was my question, Brandon, is what would a reclassification of the drug into a less sort of serious drug actually mean for the problems with, cannabis in this country, legalization, banking with these companies, all of the legitimization? How big of a step is this toward that?
Yeah, so the most important thing to note is that this is not legalization. This is reclassification. The biggest thing that it does is it opens up the door to medical research. I've been told, too, that Secretary RFK Jr. is a supporter of this when it comes to medical applications. You see how it's used in Europe, and the demand that's been there is also a point that the Tilray CEO brings up with me. So really, that's the avenue that they're trying to go here, is to amplify the medical use. And then long term, right, the hope from the industry is that we do get a broader legalization at the federal level that will then open up the floodgates to more recreational use products that we've also talked about, especially when it comes to that hemp ban.
Krista, this is like the third year you're 45. Screen for colon cancer already.
And cancer
Ask for Cologuard. It's effective.
Our world is changing faster than we know it. Or slower than we know it. Not a lot of move. Market waiting.
Kevin Hinks at the CBOE, the pre-bell playbook, joining us now live from there. Good morning. So I was just saying how it was a record-setting day. I mean, intraday we saw the Dow hitting highs, and stocks took off right after the Fed meeting on Wednesday and managed to clock in some wins. What are your thoughts this morning? Good morning, Kevin.
Good morning, Nicole. I think this is an interesting market to pay attention to because it seems to be the revenge of the 493. It's the equal weight rally that we're seeing, right? The Magnificent Seven names, information technology, consumer services, those have struggled the last few days, but not the rest of the market. It's actually doing quite well, and you may see more of that today as Broadcom will weigh down parts of the market. But this has been a overall S&P, an equal weight S&P rally that looks pretty strong still going into the end of the year. Now, Broadcom's going to weigh on the NASDAQ. That's why you see their futures are weaker than the rest. But the E-minis are very close to unchanged, and you've got the Dow and Russell higher to start the day. So I think there's a lot of good things going on in this market, but Broadcom put up great numbers, and we talked about this a lot yesterday, but they had run so much. Their valuation is so high that's why the numbers just weren't good enough to keep the stock higher. So I think this is the indicative of a very healthy market, but I think it might be the story for the rest of the year might be the revenge of the equal weight index, Nicole.
Yeah, and we saw that hitting highs before some of the others, right? I mean,
15 minutes is just oversold now. It's just cycling.
Now, Austin Goolsbee has been out speaking this morning. What do we make of the comments, and what are the takeaways? Because he doesn't want to front load cuts, right?
Exactly right. So Austin Goolsbee has been speaking, so has Anna Paulson, and really they're on opposite sides right now, but they're falling in line later. What does that mean? Austin Goolsbee was one of the dissenters from this Wednesday's rate cut. He said he doesn't want to front load interest rate cuts, and his big issue was he didn't have enough data. He didn't, because of the government shutdown and the delayed data, he didn't see enough data to make him comfortable doing that. He does feel that interest rates will be lower into next year. He's no longer a voting member of the Fed going into next year, but he thinks rates will be lower. Now, Anna Paulson, she thinks differently on that. She thinks she voted to lower rates. She thinks the labor market is more of a concern and inflation isn't as much of a concern. She thinks tariffs do not lead to higher prices, so she's not as worried about inflation. So you've got two dual.
Hey, people that are still here, I just want to say thank you from the bottom of my heart. I really appreciate those that have truly hit the thumbs up and the like video on the video. I'm going to send the SPX put to call ratio right now. Bro, it's kind of crazy because I have like 160 viewers, 150 viewers, 100 and whatever sometimes, and like it's just so hard to get the likes up. Like less than 50%, it's like 50% of the people hit it constantly, and then no one else literally cares. Like, what kind of, like what? I just don't. Someone just said, what video are you talking about? Because I said, please hit the like on the video in the WhatsApp group. Like, please, guys, just hit the, like, I don't understand. Like, like, bro, I don't understand what's going on, man. It's just a damn button. Like, it ain't that hard. All right, a button is not gonna hurt nobody. But I guess people want to watch and people want to love, but then also they hate because, yeah. But anyway, hope everything is good, whatever is going on over there. I'm just saying, man, it's just, yeah, tends to be. It's not any of you guys that are still here. You know what I mean? It's usually the people that are constantly switching channels, constantly, literally just not even giving a shit, caring, liking or what. But it's like I have to beg them every day for something I like. Like I wish I could just like it myself. I ain't gonna lie, but oh my god, how many times do I asked to? You know what I mean? Like 6 or 7 times, and I literally type in chat, "Hey guys, can we please hit the likes?" And it's literally like 7 or 8 people. Like, come on, dude. Oh my god, that tells me, man. Clearly, people are just focused on certain things like themselves, which I get. We're all human beings, but still, dude. To have a deeper understanding of things in life, it's you gotta have some sort of mind.
Interests going on in the Fed right now, but both come to the same conclusion later that interest rates should be lower into next year.
Yeah, I mean, the likelihood of them running to get these cuts in fast does not seem likely. I mean, if we get one in the first half of the year, that seems to be the plan at the moment, right?
Wild.
Well, here's what we'll see. No, you're not going to get a Fed member to commit to any hard move on interest rates.
Right.
But
you know what I'm saying? How many people wants to join the WhatsApp group? How many people wants me to be this and this and this and this and this, and then this and this, and then you're a clown if you do this, and then too loud music and do this, and then never hit the like button. Is all I'm saying. Like, come on now. At the minimum, right? At the minimum, just don't watch, or at least don't say something that is literally on your mind that is not fucking beneficial to the group, right? That is actually just showing their bias and their self-hatred and their self-whatever. At the minimum,
data that we get that will give us
CPI
will give us information on inflation, obviously.
I'm not long or short here. I'm just
payrolls,
watching.
The wages data will give us information on inflation. We'll also get retail sales, the strength of the U.S. consumer that has shown to be pretty resilient so far in terms of the other data we've gotten. So I think next week we'll get a lot of data that will possibly change those numbers for a January or a March rate cut.
Understood. Let's talk just about Trump and an AI executive order. What are the details there?
So it's interesting. The Trump administration is coming out and says there's currently 1,000 different laws from the individual states on AI. What the Trump administration wants to do, and here's the title of the executive order he put out: removing barriers to American leadership in AI. That was the title of the executive order. Now, President Trump stating that we must develop AI systems that are free from ideological bias or engineered social agendas. So they want a single regulatory framework for AI coming out of the Trump administration or the administration in general. They don't want individual states putting out what they claim right now is 1,000 different laws on AI. I think that sounds like a pretty common sense way to look at AI. One rule for the whole country, not 1,000 different statewide rules.
All right, great to see you. Good summation there. Kevin Hanks live at the CBOE. Great start to the trading day, a record day yesterday.
Well.
consumers and good for Hollywood and winners. Do have to pick a winner in the bidding war here for Warner Brothers Discovery. Who do you think it's going to be? And obviously you have a stake in this game because you're as a content creator, right, with Candle.
Yeah, we're content creators, and I think that it's never good for me if you're a creative and you do creative output in Hollywood. It's not good to see the the merging of buyers. In this case, Warner Brothers Discovery as a studio being a buyer of creative product or a commissioner of creative product. And it's not good to see another outlet like HBO Max being combined with either Paramount Plus or Netflix. These when buyers shrink, that's the problem. But I would say that the problem isn't really due to this combination that's coming up with either one. It's due to these headwinds that Hollywood is facing, two of which I just described. The lack of attention that younger people are paying to traditional Hollywood fare, the box office coming down, pay TV declining. All these are the problems that are causing issues for creative output and for creative people such as myself that are in businesses. The effect is the merger, and so one of the things, whoever wins is going to be interesting.
We did a poll at 11:30.
I went through this when
it was
Disney
higher or new LOD. 10 people said higher, 11 people said lower. It is literally just going up and down, tiny bit. No directional.
Over the top, taking advantage of the fact that
just high,
to consider higher bids,
tiny bit lower,
like this one,
tiny bit higher.
And then we ultimately won with the $38 bid and $19 billion more than we wanted to pay. There was a question mark throughout that process as to who was going to win that battle. It was going to be us or Comcast. We happened to win that. Here, it's not totally clear. I know Paramount has, gas left in the tank. They've said so explicitly. I think David Ellison said this is not.
Thank you so much, folks. We are 6 away, 4 people away from 100.
Taking the same bid that
if 4 people can come through and hit the like, I would very, very much appreciate it.
This bidding process is in the third inning.
Time is 12:10.
Who wins? I don't know. There's industrial logic.
QQQ is now 1.75% red. It was 2.17 at the bottom. At 6:11. Let's see if this holds, bounces.
For Netflix, it's a really nice
1 minute candle.
Sorry,
1 15-minute candle coming in bullish on IWM here too.
I think the urgency is more on the Paramount side. Might that show up in how this plays out? It very well might.
All right, things were way oversold. Let's see what happens on IWM. And they're talking about the housing market.
There had to be.
Welcome back. The housing market expected to shift in 2026 as President Trump works to encourage the younger generation of American homebuyers. The 30-year fixed mortgage rate now sits at 6.2%. That's about just over 5.5% for a 15-year fixed, higher than most people want. Mortgage rates expected to drop, however, slightly at least, heading into the next year as the Federal Reserve is cutting interest rates and did so this week by a quarter point, a third straight cut.
Zunair says, I have a question. Why would anyone be bearish at this moment in this situation? It should be BTD. I don't even know what BTD means, but it really has nothing to do with why would anyone be bearish or bullish right now. It has everything to do with people were speculating up and down like crazy. Setups are being built, and then they're just going to use this and this and to do this setup.
It'll happen. It'll just take a
significant amount of time. Why is someone bearish or why is someone bullish right now? It is absolutely to do with what participant is taking part of the market right now, what participants are doing what to make the market bullish and bearish right now, and off that alone, what setup is creating what setup. That's the most important key factor to learn.
COVID locked in homeowners. You have boomers and Gen X's who are living in 5 bedrooms that are totally empty, who can't even afford to move. And you have
all this up and down doesn't even make sense other than setup. It doesn't even fucking make sense up and down setup, bro. But literally, this is basically based on AVGO, NVIDIA, other things set up, other things set up, other things set up, QQQ, IWM.
Ryan, I mean, you're urging renters at this point to get back into the housing market.
Better you learn.
A big shift in 50 years. Why? What are you seeing?
No, I know I'm not biased. I'm just
Well,
saying,
we're
like,
seeing people make a
that's just how
tough
the market
decision.
is.
Do
It
I
has
rent
nothing to do
and
with
not build
someone's
equity,
idea
or
of
do I
this
own,
should be
even if
bearish
that
or
means a
bullish.
new form of
It
ownership?
has
So something we're
everything
seeing,
to
and we're
do
going to see it
with
more in
it's
2026
getting
that I've
people to
never done in
think
my
that this
career
is bearish or
is
bullish, but what
co-ownership.
is truly going
First with
on
parents, and
inside
that's
in the
something we've seen for
hidden
some time.
underlayer
But
to do the
now,
setup
with
with smart
partners,
money,
with
that's what's
friends,
most
instead of
important.
sharing a 3-bedroom rental, why not put together
I know
down
who I
payment
am, bro.
dollars,
Trust me.
share an
People say what they
LLC
want to say.
ownership,
I know who
split
I
it
am,
3 or
bro.
4
I
ways
just make
depending on the
fun of them and
state
then
because
say
the
I'm a
laws are
deductor,
different,
but yeah.
and actually go into a great investment opportunity. We're seeing that more and more and more.
Okay. And we've been waiting for this so-called Mamdani effect.
Setups all
This New York
around.
City exodus to Florida might not be playing out as predicted. There's a new report from
Intraday,
Douglas
weekly,
Elliman finding that
monthly,
89
whatever you want to
new
call
home
it.
contracts
I
were
don't know what
signed
you
in the
want to
Big
call it,
Apple.
but this shit is clearly
122 new luxury
not
apartments
random.
being listed for sale right
Market
now.
definitely not
This
going
despite the New
higher,
York
not
Post
going
reporting
lower,
that
and
Miami
not going
realtors are seeing
higher,
a
and fucking lower randomly.
166%
It's doing it
surge in
on
inquiries
setups
from
and
New York
purpose.
City's wealthiest residents
These
to
things
escape
that people,
socialism now
right?
that
Let me say
Mamdani's
this:
coming in.
the reason why I say setups and deductors is because the only reason why setups and deductions and deductors exist is because these people put in countless of hours and time and effort and blood and hard work and sweat and blood and sweat and sacrifice and experience and love and care into this shit on a daily basis, right? Is why things like this exist, right? Things like this don't just exist because people are getting lucky, people are bearish, people are bullish, people are smarter, people are dumber, people are hoper, people, I don't know. It has everything to do with everything, right? This is why I say trading is something clearly to do with the mentality, something deeper than just looking at the candle and being like, oh, I can handle it, I can do this, because we all think everything, but it's just what changes the winners from the losers is the mentality, why, how, what they're looking at the way they are. And the only reason is the way they are. And the way they are is because they have wanted to and they have decided to for themselves to do and change what they are for who they are, to do what they want, how they want. That is the only way, right? It's not because the market's bullish today, market's bearish today. Oh, this is so easy. This is so no. It has absolutely everything to do with the human test of your human capacity and your human ability to do something greater in life than to just be like, This is all it is. Some people don't fucking want to listen to that. I get it. Why? Because I've been in points of my life when I'm tired as fuck too, and I don't want to do shit ever, right? And I'm lazy as a motherfucker too. I get that. But at the end of the day, things don't just happen. Things don't just do because it is, right? They're actually happening and they're actually doing things because someone out there is fucking doing a fuck ton of work and doing something to do it. So that is it. Right, that's literally it. Well, let's see where this goes. I mean, crazy sell off. Sure, it could have bounced. I don't know where. Well, I don't know why it bounced here randomly, but I guess, right. I was expecting a bounce somewhere here, somewhere here. So I mean, I don't really care what they do. They're just creating a cycle. That's all it is. People that do not have an idea of anything like that, people that don't care about anything like that, people that only look at candles and they're like, oh, I'm a bull. Oh, you're a bear. Oh, I'm a bear. Oh, you're a bull. Oh, you should be this or that. Oh, you should. They're just getting got. That's it. But I mean, it'll always be like that. Is why I say the people over there, the guy over there scams and fucking feeds into that and wants people to be like that so you can fucking squeeze the fuck and trap and confuse and fucking just literally scam people. But I mean, that's what people want at the end of the day for themselves. Why do I say this? The way I say this is because I literally know this from experience, from what I have literally talked about with my best friend being my admin. So, I mean, brother, so all I'm saying is maybe they should record themselves, right? Saying the shit they say, and then maybe they should play it out and then listen to themselves because it's really sad as fuck. Guy talking about I paid $1,000 and then I fucking lost every fucking time and I did terrible and then he's still a good person. Oh, he still knows so much more than me. Oh, I don't know jack shit. Blah 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 blah. So you have no confidence in yourself. You are literally no believer in yourself. You have no self-trust in yourself. You just think that, you know, if you have belief in someone else in this world, you just get your fucking life scammed up good. Like, nah, dude. Wake up. Fucking face reality, right? I don't know why they need to fucking hear this shit from a 15-year-old year younger person, right? But I guess everyone's different. So, GG's, man. Some people want to live their lives like that. It's all cool. Time is 12:20. I don't give a fuck, though. I got no time. But have a good day, everybody. I'm out. I'm done for today. I'm going to work. I'm going to fucking sleep. I'm done. I'm done. So, bye-bye. But thank you all, supporters and watchers, the realist viewers, the people that have hit the like button, all that shit. I appreciate you very much. Fake viewers, fake watchers, fake likers, right? Channel hoppers. I'm sorry. I'm not trying to hate, but it's really bad for my community and my growing rate ability of my channel too. So be gone. Yeah, be gone. Be gone. Right? Hopefully everything works out. Be gone. I don't care, man. Ay, ay, ay. 6852. All right, they went lower to 1140. 1140. Bouncing to 1220. All right, so draw this on your chart. See what happens for yourself into the day. And then, yeah, we'll see. This intraday, 932. 1140. 1140 bouncing